Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends.
It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Good morning, you're watching Ask Profit with me, Somit Sarkar, and my co-anchor, Puneet. HUL has come out with its numbers. On the face of it, it looks pretty much in line with what the street was anticipating, though the stock is down nearly 1.5%. Let's get in Mayuresh Joshi, Head of Research, MarketSmith, India. Mayuresh, looking at the numbers, it seems to be pretty much in line. What is that one factor that could have been disappointing the street as of now?
Morning, Somit. I think two things. One, I think top line in terms of business segments as well, whether you speak about home care, beauty and well-being, personal care or foods, seems to be in line with estimates on what the street was believing the number might come through. There has been a slight increase in cost prima facie as we see it. And therefore, I think how the volumes will play out is going to be a very critical number for HUL. You could probably just discount the discontinued operation and the impact because of the wage code. The bottom line would also largely be in line with estimates. So I think the street is probably a little bit complacent in terms of how the volume number will come out, and that's going to be a critical factor for HUL.
I believe the investor presentation is just out, and I'm checking on the volume number. I believe the volume, what could be, the volume growth is underlying volume growth as per the company is close to around 4%. Is that better than what you were anticipating?
More or less in line with estimates. And again, I think that the entire estimate was that this quarter is going to be largely a transient quarter. GST cuts had happened largely in the last week of September. So there were a lot of inventory rationalization that a lot of these FMCG companies had to undertake in their portfolios and their inventories as well across dealer distribution network. And largely, that would have largely played out. So I think more or less in line with estimates, at least in my opinion. And once you are through with this transient quarter, I think how the management perceives the coming quarters to be, both in terms of volume and value-led growth across business segments, and how input costs are expected to play out, largely play out on the stock, in my opinion.
Good morning. It's Puneet this side. Thanks so much for joining in. Largely, we've seen the beauty segment, actually the revenue growing quite considerably compared to the other two segments. And that's largely been the story since the acquisition, right? So in quarter three, we've seen the GST rate cuts have some positive impact on a lot of companies, while companies like Dabur have also mentioned that they are expecting quarter four to be better once the GST rate rationalization has happened. What will be some of the key aspects around these things that, firstly, your opinion on it, and that you will also be watching out from the management when the press conference starts?
So two things, as I said, right? Transient quarter, Q4 should be relatively better, both on a year-on-year and a quarter-on-quarter basis, as the full effects in terms of volume and value growth should start getting played out for a large part of the FMCG pool. When it comes to the specific segmental performance, you're absolutely right. I think beauty and well-being has done well. And you've also seen in that case of Nykaa's numbers as well, where you've seen a significant outbeat happen specifically in terms of their beauty segment as well. So I think there is some element of hope that the volume should start picking up slowly and gradually as we head into Q4 and the first half of the next year. With a large part of the GST cut now embedded into prices, demand should slowly and steadily come back, reflecting in better value as well. In my own opinion, I think volume and value growth should start coming back, but let's see what the commentary probably hints at.
Right. Well, thank you, Mahesh. Thank you for joining us. So, positive commentary coming in the presentation of HUL. They're expecting FY27 to be better compared to FY26 on the back of portfolio and channel transformation. They're also expecting their EBITDA margins to be in the current guided range, and they're committed to continue investing in the business for growth. They are saying that driving competition, volume-led revenue growth will be one of the key focused priority, and the key number that has come out for third quarter is that the underlying volume growth stands at close to around 4%. So quite positive commentary for FY27, and volume growth number is pretty much in line at around 4% for HUL in the third quarter.
Well, and we largely continue to monitor this, right? A lot will be in terms of the strategy from Priya Nair as well. But let's shift focus to Ashok Leyland now. The company had posted a solid quarter three earnings with revenue growth as well as margin expansion seen. And, but there was a one-time labor cost impact. But let me welcome in Shenu Agarwal, the Managing Director and CEO of Ashok Leyland now to have a conversation. Mr. Agarwal, very good morning. Thanks so much for joining in. Largely, my first question on what we've seen, as in this particular quarter, very, very strong growth. Do you think that this could be the start of a replacement cycle where you've seen LCV growth come back very strongly? Or is it too early to predict that, given that it's only been a few months since the GST rate cuts?
Listen, the CV industry has really done very, very well in last 3 months, starting November. And even in February, we are seeing a lot of positive sentiment on the ground. Some of the customers are even coming out, the bulk buyers are coming out and talking to us about their full year plans going 3-4 quarters in future. So I think there are two things happening. One is, of course, the prices are lower because of the tax cuts. And the other thing is that there is a general uplift in the consumption economy, which is driving the freight demand. And you might be surprised to hear this, but it is also driving the freight rates up, right? So when the two things happen simultaneously, that's a good signal for any industry, because that portrays that there is a latent demand that is in the market. That is one point. The other point is that February would be the 4th month of a very strong growth momentum. And definitely, we can look a little bit far ahead into March and see that the momentum will definitely be very strong in March as well. So March, so by end of March, we would be in the 5th month of a strong cycle, which also portrays in a way that it is not a blip that has happened after GST, but it has fundamentally, it's kind of reshaping the dynamics of the market. So I would agree with your take that it could be the start of a fresh replacement cycle in the commercial vehicle industry.
The other aspect, Mr. Agarwal, has been that light commercial vehicle, intermediate commercial vehicles have seen very, very strong growth in quarter three. Do you think that the bulk segment will start to show in the Q4 numbers? Has that already started with the January, and the expectation is that it will have a bigger impact going forward in the next few months?
Exactly. So listen, when this announcement was made, it was very, very simple for a retail buyer to look at it and see what kind of benefit they will derive from this, which is purely a price cut benefit, and of course some indications from the overall freight logistics demand. But for a bulk buyer, it took a little bit more time because they were used to calculate their input tax credit, how that will get impacted. They wanted to look at their cash flows to see how they would get impacted. But from January onwards, while retail momentum is still very strong, we are also seeing that the bulk buyers are now coming out, and they are actually not thinking just short term. Like I said, they are looking at the whole FY27 plans of what kind of replacement or what kind of buying they would like to do. And that is why January growth you can see is even better than December growth. And on the mix side, it is true that when retail buyers, they come out more strongly than the bulk buyers, the mix would tend to shift towards lower and middle segments. But when the bulk buyers do come out, they are more focused on the heavy duty segments. So I think while initial 2 months, we see the mix shifting towards the lower and the middle segments, but in January and going forward, I am quite sure that the mix will be more balanced, and maybe it will tilt towards the heavy duty segment.
Given this context, Mr. Agarwal, of Q3 growth as well as continuation in Q4, where does the current capacity utilization stand in context of also investing further in capacity as well?
On the capacity front, listen, we don't have an overall issue, whether it is LCV, MHCV, or even bus. There would be a few challenges which would be very niche or localized in nature, on certain particular component or a certain particular supplier or a certain particular location of a supplier. There might be some issues that would not call for any significant amount of investments, right? So for next 2 to 3 years, I think it is safe to assume that Ashok Leyland would have enough capacity, even if the market continues to go quite strong.
The other aspect, Mr. Agarwal, has been on fleet age. Now, we've been speaking about it with you over the last few quarters, that it has moved on from someone owning a truck for 7.5 years to now 10.5 years. Now, you can talk about the improvement in quality of those trucks, improvement of roads, networks, but where do you see this number? Do you expect it to move back to the lows of 7.5 to 8 years with that direct impact on the replacement cycle as well? How do you see it?
Yeah, I think when it comes to looking at the aging of the fleet, I think it is better to look at the data in a few different ways. So even, instead of just looking at the number of years, because that always creates a doubt whether it will come down again or not, we should look at maybe how many vehicles we have now in BS2, which are of BS2 regime, how many vehicles we have in BS3, and how many vehicles we have for BS4. And then we look at aging of those vehicles, in particular categories, to see whether these kind of vehicles would sustain any longer, right? And whether that efficiency improvement which has happened between a BS3 truck and a BS6 truck, what kind of advantage that provides to that particular fleet owner or the truck owner. So I think you have to, if you look a little bit deeper into the data, it will be very, very clear that there is a huge replacement opportunity that is available in our industry as of now.
One question, Mr. Agarwal, on OHM. Now, it's one of your key subsidiaries, operates and maintains buses, electric buses, essentially in the EMAS segment. Now, you've invested 300 crores. Now, there were media reports speculating that you will be looking for external funding into this particular subsidiary. Could you clarify on that? What's been the current status of investments from Ashok Leyland into OHM, and on external funding, what is the outlook?
Yes, without commenting on the particular news item, I would just clarify our stance on OHM. OHM is a company that is engaged in the e-mass business. We think that it is very strategic to Ashok Leyland. We believe that with the adoption of EV and other alternative fuel vehicles, this e-mass model may become very prominent in the country. Right now, it is more focused on the government contracts for the electric buses for various STUs. But in future, this model can be deployed very well, even in the private sector, whether it is a truck or a bus. And therefore, OHM is a very strategic investment or a strategic entity for us. Now, we had already put in 300 crores earlier in the year in this company as equity. We had also earmarked another 300 crores that we would put in this company, which we have not put, but we will, we have enough cash on the balance sheet, so we can put it whenever OHM needs that kind of a capital infusion. Now, beyond 600 crores, we would look at raising some funds externally. We are open to looking at that. So whenever that need arises, whenever that growth point, OHM reaches that point of growth, we will look at those options.
Well, Mr. Agarwal, thanks so much for joining in today, giving us your time here on NDTV Profit. We wish you the best and look forward to our next conversation. But, viewers, let's get back to the queries now. Let me welcome in Shaina Mukaddam. She's an independent market expert on the fundamental side. Kush Bora with us here in the studios on the technicals. Both of you, thanks so much for joining in today. Shaina, just a quick question on Ashok Leyland, because while the stock price movement has been quite stark in the last few months, would you still be a buyer given what we've seen in terms of results and the outlook also very positive? How do you view the stock now?
Yeah, morning. Actually, you are absolutely right. You see, last 6 months, the stock price has doubled. So having said that, I think even the growth is likely to be pretty good. CV cycle is turning up. I have only two issues. So I think, yes, Ashok Leyland for a long term is decent. I have two issues over here for which I would give it a slight risky buy at current levels. One is, of course, the stock price having moved up very sharply. Two is the pledges that the promoter group has is pretty high. If you compare it to the holding, almost 40% of their holding is pledged. And the third negative is that the high debt. The debt equity ratio is pretty high, and that, in my view, is a risk. And so I would be a bit concerned if they're going to raise more funds, and that could impact the profitability going ahead to some extent with higher interest costs. And of course, as we've seen, the labor code has impacted their profits for last quarter. So I would be a bit cautious at buying it at current levels. I would prefer buying it at dips.
First query now is coming in from Manoj from Mumbai, and it's on Bharat Dynamics. He's holding 200 shares at a price of 1,375. He wants to know what's the future outlook for Bharat Dynamics. Shaina, any view on Bharat Dynamics?
Yeah, so Bharat Dynamics has seen some bit of correction, but I believe that if you're a long-term investor, there is a lot of orders that they continue to get from the government and defense. So if you're a long-term investor, you could buy it in a staggered way. I think the shorter term may be some impact on the profitability. So that is impacting the stock price, and should see it consolidate for some more time. But if you're a long-term investor, you could take the dips to add.
The next question is a short-term query on Avantel. Now, Prakash from Telangana, who is a regular viewer of the show, so thanks so much for sending in your query, Prakash, is asking what he should do with the 200 shares that he's holding at 138. Kush, on the charts, what does it suggest? Should he continue to hold?
He could continue to hold. However, I would suggest a couple of things. One, trailing your stop losses higher to about 145 levels. That's how you lock in your profits. And secondly, the stock is facing multiple technical resistances around this zone where it is at 155 to about 160. There's a falling trend line resistance. There's the 200-day moving average resistance, and hence you've seen the stock go above these but not sustain at those levels. So my suggestion would be, one, to trail your stop losses higher to about 145. Two, once it comes to the 160 mark or so, book partial profits and then again trail your profits, trail your stop losses and hold the rest, because 160, 155, that zone is proving to be a bit of a resistance. So trail your stop losses and book partial profits at 160.
The next query is coming in from Kunal Bhatia. He's having 500 shares of First Source Solution, bought at a price of 315. He wants to know the long-term outlook on Firstsource and wants to know whether should he buy on dips. Shaina, any view on Firstsource?
I think Firstsource, if you're looking at, maybe the mid, say maybe 6 months, 1 year type of view, I think it is better not to buy it at current levels. I would say that, there has been a bit of disappointment that has come up in their numbers that we saw in the last quarter, in the quarter gone by, December quarter. So I would not say, please do not buy it at current levels. You should look at a little bit lower levels if you want to buy. And even I think if you are holding it, I would say book 50% of your losses or profits, whatever it is, and relook at it maybe 6 months down the line. So we are seeing a bit of softness in the overall demand for the sector also. So it is better to book half out as of now.
Got the view, Shaina. But, viewers, you can also call us, and the number that for calling is on the screen up there. So you can call us and, give us your stock-related queries. The next one, Kush, this is coming on your way. This is Dinesh from Noida. He's firstly conveying his thanks to you because he did buy Shriram Pistons. I know it's your favorite stock in this month at least. And he's saying that he bought it when it recently fell, post its results as well as what we've seen in the last few weeks. He's asking what he should do with the next 5 years. Now, I know it's a very long term, but your view on this particular counter on Shriram Pistons?
Yeah, the screen, I think, said Stylum, so just a correction on that. So, Shriram Pistons, first up, thank you, Dinesh, for, this acknowledgement. I did have a fair degree of conviction, on the stock. There were a few other viewers also who asked me whether, they should continue to hold when the stock went down. My conviction remains strong on this one. 2550, 2600, very strong support zones on this one. Now, on the way up, I think the stock will, in all likelihood, go towards its recent swing highs of 3400, 3450 levels. But if you've held it, or rather if you've bought it at significantly lower levels, you should go out and book partial profits 50% because some profit booking, some resistance might come in at around 3200 mark. So book partial profits at 3200 and hold the rest with a stop loss at the 3000 level.
Shaina, also on Stylum Industries was his second question. Now that's for a long term, so what would you recommend?
Actually, Stylum Industries, I haven't looked at it lately for a long time. I would say it's a small cap. So it is a hold as of now. Basically, they are doing pretty okay in terms of numbers. So I would say it's a hold.
And Shaina, in terms of the corporate action that we've seen for Stylum, would you wait for a little more clarification coming in post that in the next couple of quarters?
Actually, I have not updated myself on that.
Okay,
so I will let that pass. Maybe you can update us.
The next query is coming in from Shankar from Bangalore, and he wants to know whether is it a good time to buy TVS supply chain at current levels. The question is for you, Kush. He's planning to buy around 1,000 shares, TVS supply chain.
Well, it's run up quite a bit. Massive jump in the last 15 odd sessions, right? From 90 to about 125 now. So while I can understand why is he looking at buying because of the momentum, I would suggest let the stock perhaps cool off a little. There has been a massive jump right now. So maybe close to those 108 to about 110 zones, where there's a gap. Once the stock cools off a bit, you could consider. From a medium-term perspective, the structure is not very encouraging. Let me also give you that caveat. But yes, there is a bottom formation attempt at place. There were reversal signs, and that's already played out. So now if you want to buy, don't buy it at current elevated levels. Somewhere close to 108, perhaps even 105. Slightly lower levels is a better entry point.
Got that view, Kush. But the next caller coming in from Bengaluru, and Ravi has a stock query for us. Ravi, very good morning. Welcome to Ask Profit. What's your query?
Yeah, see, I have a Bajaj Auto 115 number at an average price of 3,600 over a period of from COVID times I used to buy. Now the share went up to 13,000 or so, and then it has dropped. Now is it right time to add on and hold, or what should I do? Can I get experts' views, please?
Well, firstly, Ravi, many congratulations on getting into that price, 3,600. You are sitting on a profit of 7 lakh rupees. Can you continue to hold it, and did you buy it with a long-term view, Ravi, though?
Yeah, I bought it with a very long-term view so that I keep getting good dividends as a monthly income, yearly income, I should say.
Well, Ravi, that play has surely worked. But Shaina, in terms of Bajaj Auto, the domestic market share has actually been quite subdued for the company. The export has been a complete opposite story. Now with KTM also coming in, how do you view Bajaj Auto, especially since Ravi's bought it at 3,600?
Yeah, so actually we have seen the export market doing very well for Bajaj Auto, and accounts. I would say that it will account for more than 50% soon. They have managed to actually do pretty well even in their quarter. Market share is improving, so I would say it is one of the best stocks in the two-wheeler. Valuations, while slightly on the higher side, but I think for the quality of management, the investor should continue to hold it for the long term. Keep it in your long-term portfolio and enjoy the dividend. Maybe you could book small parts if you need the money, but otherwise there is no point in selling.
Well, viewers, it's now time for the rapid fire round in this edition of Fast Profit. Kush as well as Shaina, you know the drill. Keep your answers on buy, sell and hold so that we can take as many queries in the next 3 minutes. The first question is coming in on Axelia Solutions. Kush, now we don't discuss the stock too much. Ramesh has bought it at 1415 and holding 30 shares. Should he continue to do so?
No, exit.
Divya from Abu Dhabi is holding 100 shares of ITC, bought at a price of 336. Wants to know the short-term view here, Kush.
Yeah, you could continue to hold. Stop loss at around 300 or just below that.
Sagar is asking a good time to enter Jyoti Labs. Shaina, would you recommend that?
No, I would not recommend entering Jyoti Labs as of now. No.
Rajesh is holding 450 shares of RVNL, bought at a price of 531. Shahina, what's your long-term view here?
Yeah, he can keep adding it at this.
RVNL.
Hold it for the long term. Yeah, RVNL is a buy for the long term.
Netweb Technologies, Kush, Malli is asking if it's a good time to enter at the current market price.
It's very close to the support zone, though risk-reward profile does suggest a buy. I would suggest yes, you can, but 2950 is a strict stop loss.
Sunny is holding Aarti Industries for the last 2 years at an average price of 530. Kush, he wants your short-term view on this counter.
Continue to hold Aarti Industries, stop loss at 425.
Kirloskar Pneumatic, Shaina, if you track this counter, Suman has a question for the next 3 years on it. Should he continue to hold?
Yes, Kirloskar Pneumatic, he can continue to hold for the long term. Yeah.
Rashmi is holding 20 shares of Bajaj Holdings at a price of 11,600. Should she continue to hold or exit? Kush, any view on Bajaj Holdings?
Hasn't really done much. If you want to hold, keep a stop loss at 10,500, but stock's not really going anywhere.
BPCL, Shaina, bought at 215 by Shriram. Just on the basis of price, should he continue to hold for the next 1 year?
I would say it's going to be a bit subdued because we don't know where the oil prices will go. Basically, that is the only reason. So I would say it's maybe get out of half of the quantity. The stock has corrected, but still, I would say it's still something you can exit part of it.
Shubhadeep from Kolkata is holding 50 shares of Solar Industries, bought at a price of 13,500. Kush, your short-term view on this?
You should continue to hold this one. Stop loss at 11,800 to 12,000 zone.
TCS, is it a good short-term buy given what we've seen today? Kush, is what Sanjay is asking.
Yeah, no, I wouldn't venture, this bottom fishing kind of a buy on TCS or a lot of IT names today.
Sarita Devi wants to know whether should she buy Gulf Oil for the next 1 year. Shahina, your view?
Gulf Oil Lubricants for the what period you said?
1 year. More than 1 year.
Yes. More than 1 year, yeah, it's a neutral. Better to buy it at dips. Buy it closer to about 1,000 levels.
Got China. SJVN Kush bought at 77 by Siva. He's holding 2,500 shares. Should he continue to hold?
Yes, he can continue to hold. Keep a stop loss at about the 70-72 zone.
Well, that's the end of the rapid fire in this edition of Fast Profit. But Shaina and Kush stay on. A lot more stock-related queries on the other side. Stay tuned to NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends.
It's a lot simpler. We'll help people make the right auto decision.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock related queries. If you haven't already, you can start sending in your queries now. You can also call us on the number that is flashing on the top of your screen. It's the landline number. The next caller that's coming is from Andhra Pradesh. Reddy is dialing in for stock query. Reddy, good morning. Welcome to Ask Profit. What's your query?
Good morning, sir. I recently bought IRB Infra. 7,000 shares at the rate of 42 rupees.
Okay.
Can I add more shares for 1 year target?
For 1 year, you want to add more shares. Okay. And Reddy, how much is it of your total portfolio? Is it a big chunk of your total portfolio? Because I know you're already holding 7,000 shares, but is it a big chunk of your portfolio?
Yes, please.
Is this, how big is it for your portfolio, Reddy, this particular investment?
This IRB is Hyderabad, this computer real estate.
No, I'm asking if it's 10-20% of your portfolio already, this big allocation.
Okay. I am confident on this script.
Okay, I think I'll go to Shaina for this because, so Shaina actually was trying to ask because you already hold 7,000 shares at 42 for IRB Infra, but a 1 year view on the counter, what would you recommend?
Yeah, so I would say he should hold it at current levels. And if he wants to add now, if he wants to average, I would suggest a little bit lower levels to average, maybe around 39 rupees, because they have got a lot of toll projects, 2 new toll projects that are going to go online in the next quarter. So I think if you look at it over a 1 year period, numbers should look better. So he can add at lower levels though, if he wants to average.
Right. Yet another caller query coming in from Andhra Pradesh. Madhavi, you can go ahead and ask your query.
Good morning, everyone. So I want to invest 2 lakh rupees.
Right.
I mean, like for short term. This is for short term. So I would like to ask Kush. So what would be the best pick for short term? I have one in mind, PTC, but I would like to know.
You're holding PTC already?
No. I just want to have. I mean, like I have one in mind, like PTC. I didn't buy it.
Kush, other than PTC or PTC, anything that you find interesting, she wants to invest 2 lakh rupees.
Sure. Madhavi, first up, thank you for directing the query at me directly. I find a lot of flavor even now in a lot of auto anks. If you've heard me on the show, especially the morning show, you know that I do favor a lot of auto ancillaries. So Samvardhana, Motherson, Lumax Auto, and even JBM Auto for that matter. I think this entire pack has a lot of steam. So maybe you could consider one of these. And one set of stocks which has picked up a lot of momentum off late is the AMC pack. So you've got HDFC AMC, Aditya Birla Sun Life was my call today, and also Nippon Life AMC. So some of these are something that you can consider. Between the two groups, you could pick 2 stocks, divide 50,000 each, or if you prefer that, and continue to hold for 6 to 12 months kind of time frame. PTC India in particular has risen up quite a bit, but 190 is a bit of a resistance. If I were buying it, I would buy it once that resistance levels of 190 is taken out. So I hope that helps, Madhvi.
Well, thanks for that, Kush. But the next question coming on Sirma SGS, and Vanita Bala from Kuwait actually has this question. She's asking if it's a good time to buy now. Now, Vanita, we actually also did a very detailed piece on it at 10 a.m. in India Market Open on the EMS review. So if you have your chance, please do look at it. But, what would you recommend China on this particular counter, the Sirma SGS? It seems to be an outlier in terms of growth in Q3 amongst the EMS pack. But what's your view?
Yeah, and not only that, the numbers also were decent. Valuations are reasonable. So I would say, not only hold, but you can also add at current levels and hold it for the medium to longer term. I think EMS segment is doing well for them in the consumer durable segments, as well as the demand in the next quarter, next half is going to be better in terms of volumes. So I would say it's a hold and add.
Right. Before we go on to our next query, let's get in Sharath to understand what's been buzzing on the FNO side. Sharath.
Well, Somit, IT has spoiled the mood of the markets, and the important levels which we are tracking for the last 4 trading session, where at least the resistance levels are going up on the closing basis, that itself is being challenged or tested right now. Sensex also largely, the financials is where the action is there, and we can say that some kind of institutional movement is happening from the IT stocks to the financial stocks, but the entire beating is taking place in the IT space. TCS, Infosys, Tech Mahindra, HCL Tech, these stocks are down 4% and dragging Sensex considerably. Also, apart from that, BankX, we see a good up move is coming in largely, and the technical setup is looking good for BankX, but the focus should be on the stocks because the earning seasons, we are in the last leg of that. And let's just pull out the long build up in this market. Also, there are stocks and Eicher Motors and Laurus Labs, but it's kind of a weak on the technical charts. Looking at, apart from the long build up, let's have the short covering candidates also on the screen. Zydus Life and Supreme Industries as well, but largely Supreme Industries giving out their gains. Long unwinding, there's nothing convincing, to be honest. And the last one is the key short build up, and that is where IT. Only IT stocks are there largely in this FNO space. So, of course, stock specific moves are happening, but nothing much when it comes to the indices.
Well, thanks for that, Sharath. But let's go across and take our next caller from Hyderabad. Dheeraj has a stock query for us. Dheeraj, good morning. Welcome to Ask Profit. What's your query?
Good morning, sir. My query is regarding trend. I'm holding 104 shares at 4694 rupees, sir.
Okay.
So currently I'm at loss of around 43,000. I would like to hold it for the next 1 year.
Okay.
So should I stay invested in the same counter, or should I shift to something like HDFC Bank at current levels? So as of now, all the banking stocks are performing,
right?
Except HDFC. So should I be shifting to the HDFC or should I?
So you don't have any other
invest
banks in your portfolio, right, Dheeraj, right now? No banks?
No, sir.
No banks. Okay, got it. China, in terms of, firstly, your view on Trent, Dheeraj bought it at 4694 and over 100 shares. What should he do, and is it advisable if to exit to buy into banks now?
Yeah, he can exit. He can switch. I would say Trent, despite the stock having fallen, it still is expensive and likely to consolidate. Banks is good, but if he wants to recover his losses, I don't think for the shorter term HDFC Bank is going to be the one that will do it for him. Maybe if he's a long-term investor, part of the portfolio can be put in HDFC Bank. But if he's looking at maybe a 6 month to 1 year view, I think SBI or even something like a federal bank may give him better returns if he's trying to recover his losses.
Next query is coming in from Sunil from Mumbai, and it's on Voltus. He's holding 50 shares, bought at a price of 1,500 rupees. He wants to know a short-term target or any stop loss here, Kush.
Yeah, so this is a good buy. The stock's actually seen 3 weeks of consecutive gains, assuming that it ends in the positive for this week. Mild resistance around the 1500 mark at which he's bought, so I can understand the slight perhaps doubt that you might have. I would suggest definitely a hold on Voltas. For stop losses, I would suggest the 1475 to 1480. That's the zone that was acting as the resistance previously, will now act as a stop loss or a support zone, so that should be your stop loss. On the way up, if this rally continues, I won't be surprised to see the stock hit the 1445 and the 1475 mark in the coming weeks. So good momentum. There's a breakout above the 1500 mark if it closes there, but still keep a tight stop loss at the 1475 level.
Well, got the view, Kush. The next question, it's from Jose from Kerala, and Shaina is actually asking between Emcure Pharma or Glenmark Pharma, what's a preferred pick for the next 12 to 15 months and a key entry point that you could recommend?
I would say Emcure is looking better as of now between the two. And I would say an entry point could be closer to about 1,300 type of levels. It's slightly lower than current, but it's a buy at dips. Glenmark has had some small negatives that have come up in the recent past. So of the two, as of now, I would prefer Emcure. But if you're a long-term investor, then even Glenmark can be bought at dips, but not at current levels.
Right, the next query is from Mr. Ahmed from Delhi. He wants to know whether is it still profitable to buy stocks of garment export companies like Gokaldas Exports, or is the rally over? Shaina, do you see more legs to this rally that we had seen of late when it comes to textile exporters like Gokaldas?
I would say the rally is still there, but given the fact that now Bangladesh is also going to become, back into the fray, I would say at current levels, it's better to avoid till things settle in terms of how we are going to compete with, some of our neighbors. So I would say as of now, it's a hold. I wouldn't buy at current levels.
Well, the next question is on BHEL, and our viewer, Dexter from Kerala actually is holding 104 shares of BHEL bought at 65.82. Now, he still continues to hold 54 shares, so he's reduced his portfolio a bit, now at 54 in terms of BHEL. Shaina, what would you recommend on this counter? The offer for sale was, putting pressure on this counter, but should he continue to hold given just the buying price is so attractive?
I would say book half the profits. I believe that over the next 1 odd year, you're going to see a lot of competition that's going to start to come back again from China. Also, raw material prices is going to be an issue. So while order book is good, I think the OFS will continue to keep some bit of pressure with profit booking, if at all the stock moves up. So I would say book half of your profits, or at least some part of your profits. He's making good amount of profits and move to some other sector.
Well, let's slip into a short break and we'll address more of your queries post that.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends.
It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi.
Welcome back to Ask Profit right here on NDTV Profit. The next question that's coming in is from Nimesh. He's writing it from New Jersey, USA. So thanks so much for sending your query, Nimesh, and also staying up for this one. He's asking a question on a KPIT question. Actually, he's holding 500 shares at 1,300 rupees per share. Since then, been in a downtick, almost a loss of 2 lakh rupees. Should he continue to hold? Should he buy more at 9-10? Questions? What his question is.
Yeah, to the second one, I think you and perhaps even he knows my answer. I wouldn't really advise averaging, haven't done in a long time. But should you continue to hold? I would suggest yes. While the stock has been in a downturn for a while now, almost about 18-19 months at that, right? The reason I'm suggesting a hold right now is because after this massive fall that it's seen over the last month and a half, the stock's gone into oversold territories, and since its buy price is not too far, it is high, but it's not too far high from the current levels. Given that the stock's high was close to the 1900 mark at one point in time, I would suggest a hold. Although I would also suggest a deepish kind of a stop loss at the 825, 850 zone, but I wouldn't suggest averaging. You could hold, play for the rebound, closer to your buy price, exit.
Next query is coming in from Shankar, and it's for you, Kush. Again, he's planning to buy 3,000 shares of South Indian Bank. He wants to know whether is it a good time to add at current levels or any other bank that you would recommend.
I would say, Shankar, that's a very interesting choice. The stock has been on my radar, but if you've been watching regularly, I've already given a lot of buy calls in a lot of these banking stocks, right? HDFC included, but among the other names, it was Bank of India, Indian Bank, some of them. So hence, not to get the calls too concentrated, I did not initiate one on this. But yes, I do like the setup. There was a very clear breakout above the 37 mark, a rounding bottom formation breakout from a long-term perspective. So yes, the stock is in a bit of an uptrend. I would suggest, yes, you could continue or you could consider buying at this level. The 37 mark or maybe just under it remains your stop loss. And on the way up, look for targets of 45 and even 48, 49 kind of levels in the coming months. So yes, South Indian Bank after that breakout does look like it has a good setup.
Got that view, Kush. But the next question that's coming in is from Hyderabad, and Shiva Kumar has a stock query for us. Shiva Kumar, good morning. Welcome to Ask Profit. What's your query?
Good morning, sir. Good morning to the dignitaries. Just my simple question is that I have a lump sum of 3 lakh. Whether to invest in physical gold or like that to invest in ITC? Just simple question.
Sorry, it was physical gold, or what was the second option?
ITC.
ITC, the stock.
Yes,
okay. Shaina, let me come to you because he wants to invest 3 lakh rupees for the long term. Both those options are controversial in that sense, but what would your recommendation be? Some topics if you can recommend.
Well, he's given us between gold and ITC, physical gold.
Yeah.
So yeah, I think, physical gold, he can put maybe 20% of it in physical gold. No issues. I think that could be a good safety net. And ITC, yeah, I am positive for the medium to longer term. So he can, as Kush has earlier mentioned, keep a stop loss of 300 and buy it and hold it for the medium to longer term.
The next query is coming in from John from Chennai, and it's for you, Shaina. He wants to know whether is it a right time to invest for long term in Pine Labs.
Yeah, I think he can look at some bit of dips to add into Pine Labs. Maybe, they're not really making too much money as of now, so it's difficult to give on current valuations. But I think the prospects are decent, so he can add because in terms of the number of, the keys or hospital rooms that they're putting up, it's pretty decent. So he can add. He can add it at current levels, but it's definitely long term. Short term, I don't think the stock is going to go too much anywhere.
Got that view. The next question, that's coming in is from Shiv Radha from Bengaluru. Welcome to the show. Welcome to Ask Profit. What's your query?
At present, I got ONGC. I got it for the price of 39. I got the quantity 3915.
Okay.
Now, I just want to know, can I hold or sell?
Okay, so hold or sell. Got it. Shaina, on ONGC, she's bought at 257, so currently sitting on a decent profit, but what would you recommend?
I would say you can hold it for now because there seems to be an up move. Oil price also pretty steady. So she can hold it as of now. So hold.
Right. The next query is coming in from Prasanna from Bangalore. He is holding 700 shares of SBI, bought at a price of 819. Wants to know whether should he continue to hold or book partial profits and buy after some more correction. Kush, any view on SBI?
So you have to give it to Prasanna on 2 counts. 1, on buying the right share and holding it for the kind of zoom that it is seeing, and 2, on the second bit as well, which is quite rightly identified, which is yes, you should book profits when you have such massive gains. Again, I've been very constructive on SBI, have given that out as a call as well on the channel, and the stock is doing well. But now on daily and weekly setup, it's on the overheated territories. So yes, while I remain very constructive, it's a brilliant idea, and I would have said the same thing myself if he hadn't put it in the question, which is book partial profits right now, book about 50% of them, and then you could re-enter closer to about 1100 or 1125 odd levels. So yes, book profits and re-enter SBI at slightly lower levels.
Well, got the view, Coach. But the next question is from Reenu from Bengaluru, and her question is largely on Fino Payments Bank. Shaina, she's bought it at 296, holding 100 shares. Would you recommend her to continue holding for the next 1 year?
Fino Payments, I would say, the other stocks available. In fact, I've also made a mistake in the Pine Labs. That is also in a similar space. So I think both the stocks, as of now, avoidable. It's better to get into some of the small cap or mid cap banks, something like a Federal Bank. I would prefer that over Fino as well as Pine Labs.
Right. The next query again for you, Shaina, is from Afreen from Hyderabad. He wants to know which is better among Vikram Solar or Seagull for long term. Any view on both these counters?
I would say Vikram Solar is like it's a new issue. I mean, it's been recently listed and they have got very good order. The orders on hand are pretty strong. They are growing also well. So I would prefer a Vikram Solar.
Got the view, Shaina. But the next question is on Coforge. Now, we've got Kush's view. So this one's on the long term. Eastward is asking what he should do with this counter. Shaina, how do you stand in terms of the current pressure that we're seeing, all this AI-related model pressure actually across Anthropic, amongst others? What would you recommend on Coforge? Because it's fallen. 1600 was one of the key levels that a lot of analysts were watching out for. Now, way below that, what would you recommend?
Well, I would say it's better to avoid the sector as a whole for maybe a couple of months till things settle down. The sentiment is pretty negative. But otherwise, he can look at lower levels if they want to add, but not at current levels. So I would say it's an avoid as of now because numbers are also being impacted and sentiment for the sector is also not very strong. So relook at it a couple of months down the line.
Well, got the view, Shaina. But viewers, it's now time for the second round of the rapid fire in this edition of Ask Profit. Kush and Shaina, you know the drill. First one's on Avanti Feeds. Kush, our viewer has bought it at 1020 and he's asking a short-term view, a 1.5 month view. But what would you recommend?
Book partial profits, hold the rest with a stop loss at 1250.
Shaina, the query is on Swiggy. Sri Lakshmi from Chennai is holding 1400 shares. She wants to know the long-term view here.
I would say switch to Eternal.
Motilal Oswal got Shaina. Motilal Oswal Financial Services also, Shaina. For the long term, our viewer is already holding shares at 868. What should you do?
I would say book half your losses and look to re-enter at lower levels because valuations are slightly on the higher side and the numbers we saw in the last quarter were impacted. So I would say not sell exactly. I would say switch or relook to enter at lower levels.
Right. Kush, the query is on Irida. Nikat from Bangalore is holding 300 shares at a price of 237, sitting on a loss of 32,000. Should continue to hold or sell?
Exit. On SBI, Shaina, 3-year view. Suresh is asking your quick view.
It's a buy.
Venu Verma from Andhra Pradesh, 150 shares of Paradeep Phosphate at a price of 210. Shaina, should he continue to hold this counter?
Yeah, it's a hold.
Bharat Electronics, Shaina, would you recommend a buy from these levels as well?
Buy on dips. Yeah, it's a buy.
Kush, the next query is for you on Titan. Shankar from Dubai is holding around 60,000 worth of shares. He wants to know a target for 3 to 6 months.
Yeah, so this is definitely a hold. I would suggest a target of 4350 and 4500 and a stop loss at the 4000 mark.
Coal India, Kush bought at 430 by Ikambarai. He's asking if he should exit this counter now.
Yeah, you should exit. I mean, the momentum's on the downward side, yeah.
Kush, the query is on Vikran Engineering. Viraj from Vijayawada is holding 300 shares, bought at a price of 90. Should he hold, exit for short term? Any view on next 6 months?
Just to give yourself a chance, hold it, but with a stop loss at 82.
Surya Roshni bought at 270,000 shares, Shaina. Should he continue to hold this counter? Shaina, any view?
I will let this question pass to.
Kush, any view? Quick one?
Yeah, exit.
Okay, exit. Okay.
Kush, the next query is on Senco Gold. Jaya from Bangalore is holding 160 shares, bought at a price of 330. Should she book profits on result day or should continue to hold?
Continue to hold. Keep a stop loss at 345. I prefer Thangamel over Senco in the medium term.
Welspun Living, Kush bought at 125, 30 shares by Lalita. What should she do?
Sorry, what's the buying price?
125.
Yeah, you can continue to hold. Stop loss at 131.
Ullas is holding 1126 shares for Ujjivan Small Finance Bank. Kush, any short-term targets on Ujjivan Small Finance?
Yeah, there's quite a bit of run-up. Could be consolidating for a while. 59 is your stop loss, and on the way up, 67 and about 72.
Well, that's the end of the rapid fire as well as this edition of Ask Profit. So, Kush as well as Shaina, thank you for helping us solve the 50 queries. In a slightly more truncated Ask Profit is what Somit would say, but we'll be back at 2 p.m. Try and get you a lot more stock related queries, but do stay tuned. Thanks so much for watching. A lot more action on the other side.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
The latest trends. It's a lot simpler. We'll help people make the right auto decision.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I bring
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. And KYC, the company which is coming today, I'm going to give you some hints. Try to guess it and then we will give you the entire company's name. The first one is it operates in the co-working office space industry. Only 3-4 names are there. It'll become easier for you. Stock was recently listed in 2025 in September and from there it's down 24% from its IPO price and the entire industry seems to have seen a little bit of derating because it's very new, this entire office space industry. Also, another important hint I would like to give you, it's a key beneficiary of GCC, Global Capability Center explosion in India. So do watch out for this theme and this stock. And the company in focus is very interesting. It of course has an indie name to it as well. I'm talking about Indie Space Cube. Though you know the company's name is Indie Cube Spaces. That's the name coming in. And interestingly, why are we calling this management? That's also very much important. And of course the Q3 numbers have been very strong. That's one reason. Another important reason is that it's going to be Q4. But there's an important announcement coming in. The HUL presser is there. Let's go into that.
Broad-based across all segments. As you are aware, we completed demerger of ice cream business this quarter. These numbers reflect performance of the continuing business excluding ice cream. Our EBITDA at 3,788 crores was up 3% year-on-year, while the margin at 23.3% was within the guided range. Our profit after tax before exceptional items at rupees 2,562 crores grew 1% year-on-year. The reported profit after tax, which includes exceptional as well as discontinued operations, at rupees 6,603 crores grew by 121% year-on-year. As I mentioned, this includes several one-off impacts arising from our portfolio transformation initiatives. First, an exceptional gain from the ice cream demerger accounted for in line with the approved scheme and applicable accounting standards. Secondly, it includes the fair valuation impact of Oziva and Minimalist, reflecting their strong performance over the year. And finally, the base effect from the sale of water business in December quarter 2024, so there was an exceptional gain in DQ24. Moving on to our segment-wise performance for the quarter, Home Care continued to strengthen its leadership position and has achieved its highest ever market share. The business delivered mid-single-digit UVG, which translated to 3% USG on account of price reductions taken previously. Fabric wash recorded mid-single-digit UVG, while household care posted double-digit UVG. Our liquids portfolio continued to accelerate momentum, delivering double-digit growth across all brands. Coming to beauty and well-being, it delivered 6% USG, driven by strong performance in hair care and health and well-being. Hair care grew double-digit, led by volume. The segment continues to strengthen its leadership position. Within skin care and color cosmetics, winter portfolio delivered double-digit growth in the season. However, this was offset by a weaker performance in the non-winter portfolio. As far as channels are concerned, within the channels of the future, we continue to record competitive double-digit growth in skin care and color cosmetics as well. Health and well-being sustained its strong performance with high double-digit growth in the quarter. Moving on to personal care. Personal care grew at 6%, led by outperformance in premium skin cleansing and oral care. Skin cleansing delivered a mid-single-digit growth, underpinned by strong double-digit growth in Dove and Pears. Body wash portfolio sustained its robust growth and continued to gain market share. Oral care in double-digit grew and driven by both price and volume. Moving on to foods. Foods recorded a 6% USG with high single-digit UVG. And when we talk about tea within that, it delivered mid-single-digit UVG. This was partially offset by price reductions we had taken because of deflationary environment, resulting in low single-digit revenue growth. Coffee continued to deliver double-digit growth driven by both price and volume. Lifestyle nutrition grew in high single digits. This was driven by both Boost and Horlicks' significantly improved performance. Packaged foods posted a high single-digit USG. We continue to deliver strong competitive double-digit growth in modern trade and e-commerce in this segment. Let me talk about our priorities. In this quarter, we continue to sharply execute our 4 key priorities to accelerate volume-led revenue growth as we had outlined last quarter. We advanced our agenda of building modern, desirable brands. Our innovations are rooted in deep consumer insight, enabled by science and communicated through social-first storytelling. Some examples include the launch of Treseme's Hydra Matrix range, Horlicks Superfoods, and the newly formulated Vaseline body lotion. In line with our strategy to future-proof our frontline sales and marketing machine, we have doubled down on our investment in quick commerce, which is the fastest growing channel. By setting up a dedicated organization and deploying advanced supply chain capabilities, we are building a bespoke operating model that will enable us to lead growth in this channel. We also continue to double down on fewer bigger bets, leveraging our strength to scale brands and lead category creation. For example, we have scaled up our D2C brands led by Oziva and Minimalist. Both these brands put together have delivered annual revenue run rate of 1100 crores. Simultaneously, we are also unlocking new demand spaces like that of chutneys with our Kisan master brand. Let me talk about some actions we have taken on the portfolio transformation this quarter. As you know, over the last few years, we have accelerated our portfolio transformation agenda. Minimalist continues to deliver robust double-digit growth as we unlock synergies across offline distribution, media, and R&D. In line with our strategy of focusing on fewer and bigger bets, the Board of Directors has approved acquisition of remaining 49% stake in Oziva with an intent to double down on this high growth category of health and well-being. Further, as part of our endeavor to continue sharpening our portfolio, we've decided to divest our minority stake in Nutritional Lab Private Limited. We also recently concluded the demerger of ice cream business. The listing process of QUIL is underway and it will be listed soon. That sums up the performance for the quarter. As you can see, it reflects a step up in growth and we are moving with speed on our strategic priorities. Looking ahead, we do expect the operating environment to remain conducive for a sustained recovery in consumption, aided by normal monsoon, normative inflation, and supportive policy measures. The geopolitical uncertainties will remain a watch out for currency, commodity, and consumer sentiment. Our broad-based growth in the current quarter reflects the gradual momentum across our portfolio. Coupled with a positive operating environment, as I just spoke, we expect growth in financial year 27 to be better than financial year 26. Growth will remain our number one priority. We will continue to invest in the business as needed to support sustained growth, and hence we expect EBITDA margin to stay around the guided range. With this, I conclude our prepared remarks and will now take questions.
Good morning, Priya and Niranjan. So my first question is, volume growth has been 4%. Do you expect a high single digit for FY27? And also you said that FY27 will be better than FY26. Could you elaborate on the metrics? As you said that portfolio transformation and the metrics will be taken care of. Could you elaborate on the same?
Maybe I can start and give you a perspective. As we've mentioned, we expect FY27 to be better than FY26. And if I divide this, I would say we should think of two reasons for this. First is the macro factors, which are extremely conducive at this moment. We are seeing a gradual improvement in the macro factors, whether it is an account of low food inflation, the overall measures that the government has taken, or indeed our own portfolio transformation. The portfolio transformation coupled with the double down that we are doing to segment the channels of the future, existing channels, and strengthen our marketing. All of these we believe is starting to pay dividend, and therefore we expect 27 to be better than 26.
Okay, just to follow up on that, hi first of all, morning Niranjan as well as Priya, good to be speaking with you. Just want to understand this 4% volume growth number. It is much better than what the street was estimating between 2 and 3%. Given that we've seen a decline in the revenue, or revenue is in line, pardon me, but a decline in the PAT that's coming, if you don't account for this ice cream business demerger gain that we've seen. Margins have also slipped on a year-on-year basis, although they continue to be on the upper end of your guided range. Could you help us understand what has led to this volume growth of 4%, and does it actually account for the kind of underlying business that we've seen?
So let me pick that up to start with. First of all, our 4% volume growth is probably the highest in the last 10 to 12 quarters. It's been a very broad-based growth across categories, as you saw, with our USGs in 3 of the categories at 6%, and in home care we had a mid-single-digit UVG, and there was a price which was taken earlier as a correction, which led to the USG of 3%. So it's a broad-based growth. It's not a growth which is coming from just one category. Coming to, again, your question around the profits, yeah. So again, let me reiterate, because you said revenue decline. Revenue is actually grown by 6%. Yes. Yeah. On the profit part of it, I think you should look at 3 levels of that. Yeah. From the discontinued operations. Number 1 is your EBITDA growth. Our EBITDA growth is 3%. Our margin is 23.3%. The EBITDA margins include a one-time charge which we have taken on account of the gratuity impact of the labor code. And that is around 110 crores. So obviously adjusted for that, if you look at it, then EBITDA margin would have been also close to around 5% growth, yeah, at around 24%. Of course, in the quarter, the A&P has been a little lower in terms of percentage to the revenue, which will get stepped up moving forward. So the quality of the growth has been very good in terms of our EBITDA growth, absolute, that you talk about. The third element coming to the PAT. Again, the PAT has not declined. You have to look at PAT before exceptional item. The PAT before exceptional item actually grew by 1%. So against an EBITDA growth of 3%, a PAT growth of 1% happened because of the lower financial income, which was driven by our capital allocation, which we did, which is spending on acquisitions, which then resulted in the lower investable surplus. So underlying, if you look at it, capital allocation has been towards paying out to shareholders and acquiring brands which are in the category that are growing. And if you look at underlying EBITDA, that has grown by 3%, but that had a one-time charge. So that's the right way to look at the results of the discontinued operations.
Okay. Hi, Shilpa Ranipeta here from CNBC. Firstly, hi, lovely to speak to you for the first time, Niranjan. Hi, Priya again. Just following up on her question then, and you did say that the volume growth has been highest in the past 10 to 12 quarters. Are we seeing a normalization coming back after the GST rate rationalization? And do you think then we can expect the volume to be around, the growth to be around this range going forward? Because you did say FY27 will be better than FY26. And, on the same line, if you can also give us an update on how the demand has come back, how's the current demand situation, especially in urban as well?
I'll probably pick up the GST part and let Priya add on the macro and the outlook. So on the GST, as we had outlined last time, so there was an impact due to channel destocking, there was an impact due to delayed pantry buying, there was also impact due to trade support that we had to do consequent to the GST. And GST, of course, we passed on the entire benefit through the pricing. As far as the transition is concerned, by November, everything normalized. So therefore, broadly, you can view December quarter as the normal quarter from the point of view of delivery of the growth. On the outlook part of it.
Yeah, I think adding to what Niranjan was saying, I think the way to think about it is we are seeing an improvement in consumer sentiment and demand. This is especially led out of rural, but overall across urban and rural, demand and sentiment is improving. I think both the macro factors contributing, whether it is, the low inflation, all the reforms that the government has done, is leading to an overall improvement in sentiment. It is also combined with the measures that we have taken, whether it's in terms of our portfolio transformation, the channel double down that we are doing across, the modernizing of our brands, and going behind market development as the market leaders in the country. This is really starting to pay the dividends.
But that doesn't answer my question specifically. In terms of the volume growth trajectory then, do you think we're heading towards a higher single digit volume growth trajectory down the line then?
So we don't give guidance of specific numbers, but what we are saying is that second half 26 will be better than first half 26, and 27 will be better than 26.
Right. If I could just take a quick question. I just wanted to understand that, health and well-being is one area that you called out. You acquired Oziva, you have acquired the remaining stake, but what's the rationale behind exiting well-being nutrition? Because that is also very much in line with the kind of area that you're exploring with respect to health and well-being. So if you could help us understand what was the rationale behind exiting well-being nutrition.
Yeah, so first let me talk a little broadly about health and well-being. And the health and well-being segment is an extremely important segment. It's an area of investment for us, which is why we have announced that we've acquired 100% stake in Oziva. We've also brought in Liquid IV into the country. We have a further large Unilever portfolio, and Unilever has made significant investments, whether it is with Nutrafol, Ollie, Liquid IV. We have a whole range of brands. So this is a segment, an area that we are indeed looking at further enhancing and growing in the country. This is still a very nascent segment in India. As regards well-being nutrition, we had a minority investment in the company, and therefore it seemed we are doubling down behind Oziva at this moment.
And just to add, as part of our portfolio strategy, we'll continue to look at rotating the portfolio, making those choices where you do the capital allocation by investing, doubling down on one while maybe divesting on the other. So it's a continuous part of our evaluation on their own, even that brand has done well.
So good morning, Janvi here from Zevinus. I'll pick it up in Hindi. So आपके बाकी सभी segments तो अच्छा perform कर रहे हैं. There has been volume growth in all the sectors, but one specific जो personal care segment, this is the 5th consecutive quarter where we have seen decline in the volume growth. But though the decline rate has fallen down, which was high single digit last time and it is now low single digit. So do you see, since GST cut has been now, all normalization has happened. So next year for FY27, there is the recovery for this specific arena?
So अगर आप देखें तो जो पर्सनल केयर है उसमें भी हमने 6% USG ग्रोथ डिक्लेयर किया है और उसमें इम्पैक्ट जो वॉल्यूम पर आया है वो प्राइस इंक्रीज जो हुई थी पास्ट में बिकॉज ऑफ द कमोडिटी इन्फ्लेशन, उसके कारण वॉल्यूम पे इम्पैक्ट आया है बिकॉज वो सेगमेंट है प्राइस इलास्टिक ज्यादा है. बट उसके अंदर में अगर आप देखें क्वालिटी ऑफ ग्रोथ अगर आप देखें तो हमारे जो प्रीमियम ब्रांड्स हैं, जो डव एंड पेयर्स हैं, वो सारे डबल डिजिट पे अब ग्रो कर रहे हैं.
All right, well, that's the management of HUL, and the first time that the CFO has been at a press conference. And some of the comments that they've made have alleviated the pressure on the downside for the stock. Stock, of course, bouncing off from the low point of the day where it was down over 3%. But some of the points that they raised, the management, the fact that FY27, the financial year 27 that is culminating in March of 2027, is likely to be better than FY26 in terms of volume growth as well. They failed to give you a clear guidance on what that would look like. Just bear in mind that a 4% volume growth that they reported in the third quarter is actually a much faster trajectory than they've achieved over the last 10 to 12 quarters, and they anticipate that 2026, the second half will be better, and 2027 will be even better than that. That's the latest coming in, and of course, that's going to be the priority, growth specifically. They've also said that they expect that the margins will be within their guided range, so they don't anticipate that they will have to take, if you read through on that, pricing measures and curtail prices in order to bolster volume. All right, let's move on now and talk about the markets very quickly. 0.5% declines for the benchmark Nifty 50, and pressure continues to remain on the IT pack as a whole. This really is one of the primary stories that we're tracking through the day today, and there are multiple conversations that we've lined up for you as well, trying to explain what is happening here. But on the earnings front, we've got KRN Heat Exchanger, which delivered a stellar performance in the third quarter with net profit surging over 65%. As data center cooling emerged as a primary growth area for the company. My colleague spoke with the management of the company, Neeraj Shah, of course, speaking with the management. Here's what they had to say.
This is something that I read in a con call transcript of yours in November, wherein you were constructive then, and now that there is a data center policy in place. Could you tell us what would this mean for you?
Yeah, Neeraj, thank you for inviting us to just talk, especially for data center conversion. And we belongs to, of course, cooling, and cooling also belongs to data center. So as I said before, because now data center is growing in India well, and what I have news, of course, from different sources. So around 5 to 6 lakh crore going to invest in next 5 years in India, especially for data center and especially location for Visakhapatnam. So all big player, of course, Google, Meta, and then Amazon, and of course, Airtel and Jio, they are going to invest, including Adani, in data center. And we believe that whatever total investment, so around 10 to 15% cost belongs to HVAC system. And whatever cost for HVAC system is belong to 10 to 15% for heat exchanger. So we believe that total heat exchanger will be around 5,000 to 6,000 crore will be huge in next 5 years. And being a professional, big capacity, and of course, good infra, as of now, we position almost number 1 in India, particular to that segment. And if you see our last quarter result, so earlier, data center, our total revenue was around 7%, but last quarter, we achieved around 15% of our top line from data center only. So it's growing. And of course, in coming months, coming quarters or coming year, it will grow much more. And of course, now we are happy to this government announce a good policy for data centers, so it will help us to grow business, particularly this segment.
Got it. Santoshi, could you could you explain if there are already opportunities that are emerging when you're doing conversations, or where companies might be doing conversations with you or with Cooling Solutions and thereby coming to you, part one. And how soon does this opportunity become larger for a company like yours or for the whole cooling solution space?
No, it's increasing. I think, as I said, last quarter we achieved around 15% of revenue from data center only. So quarter by quarter is increasing, and some of good RFQ we are receiving from a big HVAC manufacturer for data center. Even last 2 weeks before, we received one RFQ for 100 crore is single order, but it's still not concluded because I think they are expecting order my customer and then I will receive. So inquiry, I think every data center cooling system they have, and even some new company also entering in same business, especially European and American. So we're receiving RFQ from them as well, and even they approved our some of sample as well. So I think now it's time to data center cooling system in India, of course. So as of now, we have total around 6 to 7 customer existing, we are supplying to them for data center, and 2 to 3 new customer going to enter. So almost we are doing with all for heat exchanger. So we expecting whatever like heat exchanger we use in particular this segment. So we will receive at least 50% order to us only because of our capability, capacity, and infrastructure, and of course quality. And we have our new laboratory as well, so we can help to customer to validate the heat exchanger in our laboratory only.
Okay, so quick follow-up question there, Mr. Yadav. One is, if it was 15% in the last quarter, did I hear that correctly? 15% of revenues in last quarter. Let's say, because you are growing in other segments too, I'm trying to understand, what percentage of your revenue does the data center segment become, let's say, in 12 months' time or 18 months' time?
So as we are like in different product now, so Finantube we have one of the product now, and then we are making the bar and plate heat exchanger, then we are making refrigerator, multiple 3 or 4 type heat exchanger, then we already entered in bus air conditioning. So if like we calculate only Finantube heat exchanger and particular for data center, so I think it will grow, I think 30 to 40% on the like
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
This will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Auto.
new year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know.
Lackluster day of trade on the Lal Street with Nifty hovering close to 25,800 levels. Sensex sheds over 400 points. IT, oil and gas, realty, top sectoral laggards today, while metals and auto remain resilient. HUL under pressure despite an inline set of numbers. Profits decline more than 30%. Management upbeat on growth in home care and coffee segments. Tells Profit that they expect FY27 to be better than 26. Lenskart logs a spectacular Q3 with the net profit jumping multifold to 131 crore rupees. LG Electronics on the back foot after reporting a slow quarter. Sources tell NDTV Profit that the Indian auto component industry is in a wait-and-watch mode as India and US move closer to finalize the bilateral trade agreement. New projects on hold with more clarity awaited. The government is set to release the retail inflation data for January based on the new CPI series today. The new series with base year 2024 will cover 358 items as compared to 229.99 products and services factored in the 2012 CPI series. The country is expected to witness widespread disruptions today as several central trade unions backed by farmer groups have called for a nationwide Bharat Bandh. The Bandh is in protest of introduction of 4 new labour codes by the government. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take it straight to how the markets are really behaving. at midday today at noon. Now, Nifty 50 given up on the 25,900 levels quite comfortably and settling in with a lot of weakness that is seen in the market, and that is across the board, not just on the key indices. So over 0.5% down. When we talk about Nifty 50, Sensex has lost more than 400 points. And the biggest drag really in the market is coming in from the IT sector, where the index is down 4.7% in trade at the moment. Remember, apart from the top IT companies, it is also the mid-cap IT which is taking a very deep cut of 4 to 5% when we talk about companies like Coforge, Persistent, as well as Emphasis and many others. So IT drag is a big drag coming in, but not much can be spoken about many other sectors also which are really not contributing to the momentum. Bank Nifty, take a look, which is showing an outperformance to the key index with some of the banks really performing well. But on the other hand, remember that it has also slipped in the red in the last 15 or 20 minutes of trade and marginally in the red at the particular moment. Mid-cap universe, and underperformance to the key indices. So the broader universe is also showing fair bit of weakness. When we look at the sectoral play, of course, IT is the big story of the day. FMCG is also with realty down, but IT sector is down by far. The only tinge of green that is really seen in financial services as well as the metal sector, with slight bit of gain seen on those two sectors, while the rest of the other sectors are in the red. Remember, in financial services, even the top contributors on Nifty 50 in terms of percentage are Shriram Finance as well as Bajaj Finance. And when we look at the Nifty 50 component overall, then again, HDFC Bank is coming in as a big drag, and keep an eye out on some of the banks. It's a mixed bag, but some of the big banking names like Kotak, Axis, HDFC Bank, PNB, all of them deep in the red. But let's also focus on one particular counter which is really beaten down in trade, which is Som Distilleries. And take a look at that particular counter. It is trading closer to the 52-week lows. And from the 52-week highs, remember, it is less than half when we talk about that particular stock price. A lot of it is owed because of the weak set of numbers coming in on this beer and premium alcohol manufacturer. J.K. Arora, who's the MD of Som Distilleries and Breweries, joins in now to give us more sense about the performance and the way forward and what lies ahead for the shareholders of the company. Mr. Arora, always a pleasure to welcome you on NDTV Profit. My first question, there is a fair amount of weakness that is seen on profit as well as profitability, and a large part of it is coming in because of the beer pricing realizations being under pressure and even volume taking a huge dip. Give us a sense on what really transpired and how do you see that being projected in the present quarter?
You see, there has been a all-over impact on the all beer manufacturers of the all companies, primarily because of weather. Weather has this year from 15 June has not been favorable to the beer business. Normally, the summer is continued up to the July, but this year, this actually cold started from the raining started from 15 June onwards. That has affected the business of overall everywhere in the country, the change in weather. That's one. Second thing is the impact of that Karnataka taxation part, that they have done the sudden change in the tax structure, so which has affected the beer sales. Now they have corrected, but once the business is down, then it takes little time to go up again. So these were the two reasons actually which has affected the business for this quarter especially.
Right.
More. But as you said, as for the current quarter, things are quite better now. It is doing very well, and we hope whatever the top line is lost in this thing will be recovered in this quarter. So we are not going to be the anything negative by the end of the financial year.
Right. That's thanks for confirming that you are saying that a large part of dip in the revenue will get recovered in this particular quarter. Give us a sense on beer realizations that you are seeing in the present quarter, because we have covered fair bit of time in this quarter. So what are the realizations looking like? Because on a YOY basis, the realizations for beer had dipped.
You see, when the sales goes down, so then the pressure comes on all the beer manufacturers. Then they discount the product more to recover the sales and all. So that affects the profitability. But in our case, the profitability has not affected much. If you see first 6 months, we have been much better than the previous year, our margins. But since the total overall sales were down, so that's why the total profitability got affected. But profitability as such has not been much issue in this thing. We, at least other companies are facing that, but we are not facing that. Our profitability is all right. And EBITDA and the net profit will not be so less in comparison to other companies by the end of the financial year.
Right. If you can put a number to the realizations, any guidance on that, and also the demand and the volume growth for this particular quarter for beer.
Yes, this profitability has affected 1 to 2%, but since this quarter is doing well, so I think that 1 or 2% loss would be recovered. And coming this quarter as a whole, I think there is not a point of worry. This thing. You have any particular question about?
Yes. So I have 2 more questions, J.K. Arora. One, of course, is the raw material pricing. How is that really shaping up currently? And the steps being taken to mitigate rising raw material and packaging prices?
This year, the raw material shortage has not been there except can. Beer cans has been in a tremendous shortage. One reason is extra demand, and then another is there has been a restriction on the import of the cans because of some quality measures taken by the government of India. But with that has been resolved now. Now they have permitted the import of the cans from this thing. So now there are neighboring countries like Thailand, Sri Lanka, they are supplying. So the situation is better now. But the can has been an issue because demand in the can is increasing. But a lot of capacity of the fresh manufacturing capacity is coming up. I think in the coming financial year, this issue should not be there.
Right. And my final question to you, your manufacturing unit license in Madhya Pradesh has been suspended, which you have appealed in the High Court or in MP as well. What is the timeline of resolution as estimated? Of course, the matter is sub judice. And in the interim, while the license is suspended, what is the kind of financial impact that you will have to bear?
You see, when there is any disruption in the business, there has been definitely an impact. But this impact is not going to be much because there has been an issue of the interpretation of the law, which we have challenged. And in the first hearing itself, the order has been closed for order. So we are waiting for the order. Any day, today, tomorrow, any day, order is expected. No more hearing is pending. Since it was a matter of interpretation of law, and I think we have a very good case, and we should get order in maybe in 1 or 2 or 3 days maximum.
All right, Mr. J.K. Arora, thanks for giving that confidence and clarity on this particular order really coming in. All the best for the present quarter. Thanks so much for joining us and taking our questions on the performance and the way forward for the company. Take a look at this particular counter, holding on with minor gains, but it has seen a substantial cut in its prices after the weakness seen in the results, and therefore it has a lot to pick up. It is hovering closer to its 52-week low pricing, but slightly above that at 87 odd rupees per share. All right, let's also take a look at the biggest story and the biggest laggard in the market, which is putting substantial pressure on the overall market. We're talking about the tech sector and a lot of AI pressure really coming in. So IT is under pressure like never before as AI rewrites the delivery models, squeezes the pricing power, and puts India's tech engines on notice. The disruption isn't coming. It's already here, is what experts say. And my colleague Jasmeet puts all that into perspective for us. Tell us, Jasmeet.
Well, Nisha, thank you for that. As rightly said, this is a big story in news today, and IT has been in focus over the last few months. While the reason why the stock is tanking today, firstly, the AI disruption fear is hitting the legacy IT businesses. All this while the AI was impacting IT whole as a company, but right now the impact is directly on the legacy business. While legacy business contribute majorly to the revenue and is considered a high ROC business for the companies which are actual wealth creator is now being targeted. Given AI-led tools are compressing the cost, and it may further lead to reduced revenue for the companies going further. For if you look at the third aspect, why the markets are falling, firstly, the new AI automation tool which have been released in the US, that's something that's impacting the markets and the IT sector as a whole. While there's a tool on wealth management called HUL AI, which got launched a couple of years earlier after the Anthropic AI, the tax and legal tool. If you look at the overall AI tools coming in the market, that kept on impacting the IT, and the IT is still getting impacted by that. If you look at the other key aspects, IT being a human-led service, that's something creating an overall trouble to the industry, given the tools will replace the human-led IT industry. So all in all, we see a negative set of news for IT as of now, but it's a wait and watch of how does the overall Q4 and FY27 turns out going forward.
Right. Thank you so much for that, Jasmeet, for putting all that into perspective. IT sector, more than 4% down in trade is a big drag. Now, Mahindra & Mahindra is betting big on AI, but for a longer term. In fact, Mahindra & Mahindra's group CEO, Anish Shah, while talking to Profit, said that AI's hype currently is far from reality really coming in, but will have a great impact in the long term. Let's listen in.
Every time something comes in, it looks different. When blockchain came in, it looked very different at that point in time. So the fact that it's here and now makes it look different. But technology in general is always very much hyped in the short term and sometimes underappreciated for the long term. So AI will have a very positive impact, but at this point, the hype is far greater than reality. So we are adding some capacity to EVs as well. The bookings continue to be very strong at dealerships on a daily basis. So that trajectory is a good one. And there is a wait right now because the demand again has exceeded our expectations. As we keep ratcheting our expectations up as well, we keep continue getting more demand. And on balance, I think we are in a good shape. We've also announced a new plant which will significantly increase capacity, but there are a number of actions between now and the new plant coming up for us to do that. And therefore, we should be able to deliver what we need to for our customers.
All right, so that was the big earnings of yesterday and the management talking about the AI impact also coming in, but for the long term. But the news of today when it comes to the earnings, big earnings, is from the FMCG space. Hindustan Unilever's Q3 net profit rises 136% to 7,075 crore rupees. But remember, that it has a one-time gain. So now let's take it straight to an important exclusive conversation as new CPI series kicks off from today. NDTV Profit catches up with Dr. Saurav Garg, Secretary of MOSPI, to understand the changes and the process. Take a listen.
Well, India is overhauling its key macroeconomic indicators starting from retail inflation today. To talk more on this, we have with us Dr. Saurav Garg, Secretary, Ministry of Statistics. Welcome to NDTV Profit, sir. Let me start by asking you, for very simpler terms, what does this rebasing of consumer price index means?
Whenever we compare, let us say, the change in prices,
we need to compare it with some base, so to say. So when we say that there's a change in price or increase in price or there's inflation, so for that purpose we need a base year which becomes a comparator so that from year to year we can keep. And the base year needs to be at a fixed level, because if you keep changing the base year, then you can't compare what was the previous months or the previous year's change in prices. So up till now we had the base year of 2012. We are updating that to 2024. But apart from changes, we are making other changes also, changes in the methodology, etc. But effectively it is to ensure that we are comparing ourselves with a more updated base rather than something which is more old.
So is it this going to be only statistical change, or it will have a material impact on how inflation is being interpreted so far?
Yeah. So the consumer price index, the objective of the CPI is to ensure that the change in prices reflects the consumption basket of an average household. The present consumption basket was based on the consumption patterns in 2011-12 when a survey had been done. Over the past 10 to 12 years, there have been changes in the products that people consume, the services that they get. Digitalization has happened. There is an increase in overall socio-economic status of people. For example, our consumer expenditure survey showed that even at the lowest decile, there's nearly a doubling of expenditure. So all this means that the consumption basket of people has changed in these 10 years, and that will get reflected so that it becomes more representative of the prices being faced by an average household in the markets. Apart from this, there are changes because of new data sources becoming available and over new technologies having come in. So that would also get. And there are international methodologies and classifications change. So we would be incorporating all the three aspects: the change in the consumption basket, the change in the data sources, and the classification and methodologies.
You explained it well, but just also wanted to understand the whole thought process behind this new CPI series from 2012 to now 2024. Also wanted to understand the fact that, do you really think that the consumption pattern has actually changed in past 10 years? How you actually arrived at the new CPI series, the new number?
Yeah. So we do consumption expenditure surveys. We had done it in 2011-12. We did it for 2 years post-COVID just to confirm that the consumption patterns have come back to what would be a normal year, if we can call it. So if we look at the 10 years comparison between what was the consumption patterns then and now, for example, we find significant changes in the food category. The consumption of rice and wheat has significantly reduced. People are consuming more fresh fruits, fresh vegetables, dairy products, fish and meat. There's a change in the types of services people are now having access to or consuming. Library services have become obsolete now. People are using OTT platforms and digital services to a much greater extent. There have been changes in, for example, the amount of prepared food that people are eating, restaurant services. So that has increased. There are changes also on the housing side in terms of the expenditure on utilities, water, electricity, given that access to these has improved. So all these changes need to get reflected in the CPI, because it's very important to ensure that the prices faced by the household is what we are recording.
Well, I want to understand more on this, that how this rebasing is actually going to impact the headline numbers in terms of your households, etc. Will there be a structurally changed or this will just reduce the volatility, which I think is one of the area which you're looking at?
So see, our objective is to ensure that whatever data that we produce is much more representative of the consumer experiences. Our focus is on to ensure that it is accurate and to ensure that it is representative. We are really agnostic of what actually those numbers would be, because how these numbers are used, that I would just like to mention a bit. The CPI forms a very important input to the Monetary Policy Committee of the RBI, which sets the interest rates, and these interest rates obviously impact people both in terms of what the savings rate will offer and the loans will offer. This data is also used in a variety of decision making by the government, because it impacts areas, depends on where the investments need to flow, wherever if there are unnatural price increases and that's leading to shortage of supplies, then it also gives an indication to businesses of where there is perhaps a need for increase in investments. But our focus, that's why, is to ensure that the data that is being produced actually represents the lived experiences of people.
As you rightly mentioned, that it will have a impact on how the RBI actually interpret the inflation numbers, because that's what the Monetary Policy Committee do. Wanted to understand that what are the new addition which we would see in the new series of CPI basket, and how you allocated the weightage now?
So as I mentioned, the weightage allocation is based on the consumer expenditure survey that we do. That gives us an idea of what are the different types of expenditures that people do on education, on health, on recreation, on transport and conveyance, on these different activities. In terms of individual items, we have increased the number of items in our basket from 299 to 358. Keeping in view a wider diversity of consumption of both goods and services. The service category has increased by nearly 25%. New products have come in, things like food processors and activities, as I mentioned, some of the services that I mentioned earlier. So all this is done based on actual survey. What impact it will have on the final numbers will depend on the prices of individual items from month to month. I don't think we can make a general conclusion whether there will be a rise or a fall in the index. That will change from month to month based on the actual prices.
Just the follow-up on the CPI basket, you said that you increases the share of services to 25% of the total basket.
No, not 20, by 25%.
By 25%.
We had 40 items earlier, now there are 50 items of service items out of the 358.
Okay, so what made you think to reduce the component food, that weightage in your CPI basket? What's the rationale behind it?
So when we did our expenditure survey, we ask, and when we do surveys, our sample size is in lakhs. We do some of the largest surveys globally, given our population. And we do it in a manner what is called stratified sampling, so that it reflects the behavior purchase, in this case the consumption behavior of different categories, different deciles of population. So for food, we saw that there has been a considerable decline of expenditure on cereals, as I mentioned, and there has been changes and increase in some of the others like horticultural products and etc. So given what has been the total expenditure proportion, what we calculate the proportion of expenditure on food, it has reduced in terms of percentage terms. But you must remember that it's not necessary that the total actual expenditure has reduced, because the overall expenditure, there's been more than a doubling of total expenditure at different levels, or more than doubled. So the total actual monetary value of the money spent on food may have increased, but in proportion to all other expenditures, there has been a reduction.
Could you also elaborate? I know that you said that new items have been added, but then if you could elaborate the major percentage in terms of weightage in the CPI basket which you're looking at, for example, services, you said. Right. Are there more which now have a higher weightage than food, or perhaps the overall basket, so how you kind of allocated that?
Yeah, if you look at the proportion, for example, transport and conveyance, that has a much higher weightage now. People are much more mobile, they are traveling, maybe for work purposes, for leisure purposes. There is an increase, as I already mentioned, in some of the dairy products in food. There has been an increase in education as a whole. People are spending more on tuition fees and books, etc. So, I mean, if you look at each of the different items, there would be changes. There would be increases in some and decreases elsewhere.
So do you expect that after reducing the food weightage in your CPI basket, you will have less volatility in your inflation number, headline numbers?
So I think it's difficult to make a estimate of that.
But can we safely say that it?
I don't know. I wouldn't like to speculate on that. Okay. Because the volatility depends on the changes in prices of different items. If compared to food, there are changes in some other items, volatility could be there because of that. So it would not be correct for me to make any such
But was it causing in your study the volatility in that trend?
In some of the previous years, you must realize that in some items, yes, food items, there were volatility. But so is the case in some other items also. So it's not that volatility is only restricted to a few items. And perhaps from time to time, those items change. So it's not remain the same. And so one doesn't know going forward what will be the change in prices.
Talking about the inflation, because that's one major macroeconomic indicator, the government is also, the MOSPI is also looking at rebasing your national account as well, which is your new GDP series. If you could talk more about that how that's gonna change the entire sort of GDP projection, because that will of course have an impact on the budget estimates, etc., what government has put out and survey has put out. So if you could take us through that as well, how that is going to change the entire GDP accounting.
Yeah, so we are updating the base year for GDP to the year 22-23. And the reason why we are doing it is, number one, the structure of the economy changes over the decade. And in the last decade, there has been significant changes also because of the focus on digital India and digitalization of a number of products and services. Apart from that, due to consumption patterns change, which I mentioned earlier, there are some new products which get produced and some old products cease production. So this needs to be factored into the GDP and to correctly reflect the structure of the economy correctly. Then the second major change is availability of new data sources. GST was introduced in 2017, so we have that data available. We have e-Vahan data available, which gives us up-to-date data on the transport side. We have PFMS, the Public Financial Management System data available, which gives us an idea of what is the expenditure of government right up to the village level. So because of this, new data sources being available and changes in methodology, technology changes, and therefore we have much more up-to-date information available so much more faster. So for a host of these reasons, the GDP base year is being changed, and we are incorporating these data sources and reflecting the correct weights of these economy.
Okay.
And whether it will change the final numbers, that again will depend on what were the indicators that we were using previously, and what is the better data now we have available of that. There could be, it could be changes in the positive direction, but there could be changes negative also. So the final output could be either positive or negative.
Just for the clarity's sake and a follow-up on what you just said about that, will this going to impact the quarterly numbers as well as the fiscal number, the overall year number?
Yes, I mean, we are because the structure of the economy and data sources change. So the method that we are using to calculate both the quarterly estimates and the annual estimates, both will change. But as I said, that whether they change positively or negatively it's too difficult to mention.
Again, the clarity on the fact that you said what has been added over the period of time with the new numbers like GST, Vahan, etc. But what has been deleted in what you factored in and deleted, which is now, not relevant in today's era, in today's economy?
So, for example, number one, products or industries which have ceased production. They automatically move out of the GDP. In any case, it's not that they were a part of the GDP earlier, because the production estimates are updated every year in any case. So one doesn't see much changes in that sense, because the production figures we take from, for example, company reports, and that from a year-to-year base changes. But data sources, some are more available now. For example, for minor minerals, we have greater data available from the states. And some of the earlier data sources, for example, for electricity consumption, we have better data available through the DISCOMs and the Central Electricity Authority. So many of these data sources keep changing from year to year. But I think technology is one thing which has improved. So the way we collect that data, process that data using portals and platforms, that makes the collection and availability so much faster.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends.
It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. on NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Hello and welcome to NDTV Profit. You're watching Trending Stocks, a new show that brings you all key offerings across key stocks that are buzzing in trade today. My name is Puneet Zaveri. With me as always is Sharad Dubey. And over the next half an hour or so, we'll try and focus and put key stocks under the limelight, get you a perspective of what's leading to them and get you the fundamental view as well. But, before we do all of that, Sharad, how are the markets looking like right now? Because it's been a day where you're seeing individual movers yet again dominating the news flow. But what are you picking up?
That's right, Puneet. Thanks for that. And you see, largely the Nifty has been impacted by, of course, HUL's earnings, IT stocks also dragging it. But that important level of 25,800, that's where the bounce is coming. And hopefully a little bit of recovery is definitely coming. But Nifty Bank also, there was a big slide, just around 20-30 minutes odd ago. And now again, it's trying to come back to its flat levels as well. If you look at the Nifty Bank technical setup, it's still better. But now let's look at the key factors to watch, how the market is placed right now. IT stocks and a weak Q3 numbers from HUL, even after the commentary coming in, has dragged Nifty index, and that is where you could say the key support level of 25,600, that's the lower level. A little bit above level 25,800, that's what we'll be looking out for. Nifty banks, it's a decent range I have given, between 60,000 to 60,500, where the support level is lying. It's a bit larger. Buy the dip strategy still holds for both Nifty and Nifty Bank, technical analysts are suggesting. And also, looking at the other trigger is the higher call option bets are there. So that's why we are seeing a little bit of recovery happening in, because the PCR numbers, that has become almost, you could say, 0.6 times. And of course, the next one is the Sensex expiry at place. So the last session might turn volatile again. So it's very difficult to understand which side the market will move. The positioning is, of course, moving from the ITs to the banking names as well. That is where the comfort is lying, especially for the FIs. Broader indices are still underperforming the benchmark indices, and that's, of course, a concern coming in for the markets. So these are the important factors which you should be watching out for. But over to you, Puneet. Looking at the markets right now, there are a lot of stock specific moves. What are you getting in your watch list?
Well, some key ones, and SBI is yet again on the top of that watch list. Stock touched 1,200 rupees today in the trading session. It's also important to look at SBI in that context, because stock was at 184 rupees back in 2020 post the COVID correction. So from there, almost a 10x, not 10x, I think it's almost a 5x bagger. A key one hits 52-week high today. Kirloskar is the other one. Strong Q3 results. Profits are up 56%. But Lenskart, arguably one of the biggest surprises yesterday in terms of quarterly results. Very strong results, very strong commentary. EBITDA is up 118% in this particular quarter. Shows you the strength and of this particular counter, especially post the controversial listing all around the valuation. This one's definitely surprised the streets today. SJVN stocks buzzing on strong volumes, up 3x its 30-day average, and a similar trajectory seen for Finolex Pipes as well, at almost 16 times as well in terms of its volume. LG Equipment is the other one where results were quite strong, but the IT stocks, that's one which is selling under pressure. We are again seeing a similar Anthropic type move. So this is probably the second time where it has been hit. This time the name of the game is Hazel, and could lead to another moment of pressure. Now, we spoke to Anish Shah this morning on the back of M&M results. He mentioned that he doesn't see too much of an impact of these on the IT players, but that'll be a story to watch out for. HUL also led, the results were a miss because of that one-off, but largely, decent commentary and volume growth of 4% led to an upbeat in the stock at that time. Eternal is the other one where Flipkart could soon start delivering your food too. That's the key question, and probably seeing that impact, but it'll be something to watch out for. LG Electronics was a weak quarter through and through, while Amara Raja also was weaker in terms of below estimates. The con call remains key for Amara Raja, given that Exide has managed to give some upbeat commentary in its conference call while the results weren't too much. But Sharad, back to you for some of the key ones that you're tracking in terms of the rapid fire round with our guests.
Yes, thanks a lot, Puneet, for that impressive list. Joining us is Osho Krishnan. Good afternoon, Osho. Always a pleasure to have you. We'll start our rapid fire. The first one is the IT stocks. It's falling very much? Any important short positions we can take in, or is there any value buying here?
Very good morning, Sharad. Firstly, thank you for inviting me at the show. Well, yes, no doubt IT counters are gaining very strong momentum on the lower end, and majority of the counters, they take a lot of time, maybe week or month of time to have a decent recovery. But within last 3 trading sessions, we have seen breakdown in major of the mid-cap and large-cap IT names. So at present, there has been decisive breakdown from historical support levels. So it will be advisable to stay sidelines for major of the counters until they recover from the bottoms, and from there onwards, some stability and consolidation can only lead to a gradual up move. But at present, only short-term aggressive traders can look for shorting opportunity in major of the IT companies.
Okay, so shorting opportunities are there in the IT companies, but keep your checks and balances there. SBI is something, the stock is doing well. It's the 4th largest company in India now in terms of market cap, hitting its 11 lakh crore mark. Further upside left, Osho, for SBI?
It's overheated. The parameters are extremely stretched, and technically the counter has already seen a very decisive upsurge. So from here onwards, technical levels does not have any play in the momentum in this counter, but it will be advisable to ride the momentum and trail profits. At present, 1140 is the strict stop loss that one should have in SBI, and try to maintain the momentum and try to ride the momentum for short-term perspective.
And Osho, your views on Eternal? Reports are coming in that Flipkart may start its food delivery soon. Your views on that?
See, overall Eternal, I was expecting that the counter is having a kind of a very strong resistance around 312 odd levels, and in the last 2 trading sessions, the counter was showcasing some strength. But again, with this news, the counter has slipped from a higher zone. So I expect that there can be a decent consolidation phase for Eternal. On the lower end, 285. On the higher end, 312, 315 is the range. Any breakthrough from the range can provide momentum in this counter.
And Osho, your views on Amara Raja? Very weak set of quarterly numbers coming in.
For Amara Raja, majority the counter is into a steep correction. It is into a corrective phase. No doubt in last 2 weeks, the counter has gained some kind of momentum from the lower levels, but still is struggling around the zone of 50-day exponential moving average. And with today, it has even plunged below 20-day EMA. So I expect the momentum to be on the lower end, because the counter has given a major breakdown from the zone of 910, 900 odd levels. So that remains a crucial hurdle for the counter. Any sustained move beyond 915 can only give an opportunity to accumulate. Till that time, better to avoid the counter.
And your views on Lenskart? Very strong Q3 numbers. The EBITDA was a significant jump, and the India business went up 40% on a year-on-year basis. Your views on that?
See, the technical data is very limited, but looking at the whatever data we have on the technical front, the counter is into a strong momentum of higher highs. So I expect the momentum should be continued on the higher end, but on the lower end, 480, 475 remains a crucial support zone, and one should wait for a decisive correction or a profit booking in the counter before accumulating at present levels.
And your views on LG Electronics? There's a weak quarter, weaker sentiment in the technical charts also. Important stop losses for LG Electronics?
First support is around the zone of 1400, which was even the lows for today's trading session. So I'm expecting that 1400 should provide some kind of cushioning to the counter, while the sacrosanct or very strong support lies around the zone of 1355, 1360 odd levels. So these two should be seen as a stop loss for medium-term investor, and on the higher end, again, the counter can see some kind of momentum only if it sustains above the zone of 1520.
All right, thanks a lot, Osho, for your views for the rapid fire, but action is still there. Over to you, Puneet.
Well, Ashok Leyland, this is the stock that we're tracking now, Sharad, and it remains in focus after a robust Q3 performance. Revenue growth was also healthy. Slight impact in terms of its profitability that was led by a 50 basis point impact on its commodity cost as well. But we had a chance to catch up with the management of the company, manager, director and CEO Shenu Agarwal, also discussed the viability of contracts, essentially the GCC contracts for electric vehicle bus orders. Now, they missed out on a big one. Both Ashok Leyland and Tata Motors did not get any bids in the 10,900 bus order from CESL. And I asked and posed this question to the management of what is the strategy going forward on further bus orders that they would want to bet in. There's another tender around the corner. Would they be betting in? Listen into what they had to say.
Yes, so Ashok Leyland, we don't want to, Ashok Leyland is basically an OEM. Our focus area is not into running the buses on the roads. Our focus is on enhancing our product capability, technology, our distribution, our service reach, etc. So when it comes to EMAS kind of a business, it is better done in a different entity, which is OHM now, because that business model is very different from what Ashok Leyland does. Now, as far as the last tender of 10,000 plus buses were concerned, you are right that most of the larger companies or OEMs did not win any of the quantities in that tender. And I can say for OHM at least that we are very clear that we are not going to run after quantities or orders at this stage unless they meet our minimum threshold return criteria. We are not a company that will burn money just to get more top line. That is not our approach. Our approach is to very effectively run these buses. You can imagine when you undertake a 12-year contract, you have to be very, very sure in your calculations, that you are promising something for a long period of time. So your confidence on your product, your technology, your warranty, your life of the product has to be of that order. And we know, we are in truck and bus business for last 78 years, and we know how these things run. We have a lot of experience of running buses for more than 12 years. Many of our buses are running even beyond 15, 20 years. So we have all that data in place. And therefore, even in future, if we find that these tenders are not offering us that minimum threshold of return, we will not participate. But of course, there are options that we are working on, that how we get a certain share of this business without diluting our threshold on the margins.
Well, we of course had the conversation with the management today at 10:35, and there was some of the other areas discussed on fleet age amongst others. So if you missed it, do catch it on a live YouTube feed. We'll also upload the video separately as well. But let me welcome in Raghvendra Kedia, founder of Prosperity Advisors, now to get his view also. Raghvendra, thanks so much for joining in. It's been a while. It's also a slightly different setup from the last time we spoke. But on Ashok Leyland specifically, let me start off with, it's been a strong quarter for the company. And management is optimistic on the future as well, because we've just seen light commercial vehicles get a big fill-up. So the MHCV growth is still yet to come. What do you make of it, given that we've already seen a sharp rise in stock prices for the company? Is it still a buy at these levels as well?
Good afternoon, Puneet. We continue to like Ashok Leyland. If you see the growth, it has come across the domestic segment as well as the export numbers are also very impressive. So that's very comforting. On a revenue basis, the company has grown by around 5%, but on a profitability basis, the company has around 22% of growth. So that metrics is also very healthy in terms of going ahead. The management commentary about a slow and steady approach is also very good. We believe Ashok Leyland at current levels would continue to clock an earning of around 6 rupees on a full year basis, and giving a P multiple of around 40-42, we get a target of around 250. So that's still around 18% upside from current levels for a 1 year investment horizon. So on the valuation metrics, we continue to like Ashok Leyland, considering healthy revenue, profitability growth, revenue coming in from domestic as well as export market, and a very cautious but progressive approach by the management, and they have done walk the talk. So it's a buy even at current levels for a target of 250 12-month investment horizon.
The view coming in for Ashok Leyland from Raghavendra, but interestingly, we'll talk about the IT space. The Nifty IT index has tanked. All the major IT companies, large cap or mid cap and even small cap, all of them falling on AI concerns. Is it the IT index or the Indian IT sector? Is it the AI trade or the anti-AI trade? The market is very confused and spooked as well. But to give in a little bit more flavor and to clear our doubts why the IT stocks are tanking in trade, we are having Jasmeet with us. Jasmeet, what are the reasons for the IT stocks falling in trade?
Well, sure. Thank you for that. It has been a lot about IT all this year, and the stocks have been tanking in trade. Nifty IT is almost 30-odd%. And here, top 5 takeaways why the IT is tanking today. Firstly, the AI disruption is something that's hitting the overall IT as a pact. But not just the IT services, but also the legacy services, which formed a major chunk of the revenue. Well, secondly, we look at the overall market. They expect a sharp price compression given the AI tools reduce the overall cost. So that will directly hit on the revenues of the company. While thirdly, the new AI automation tools that we see coming up every now and then from the US, that's firstly the Anthropic AI, then you also saw HUL AI coming in and impacting the overall tax planning and the other wealth management services, something that's impacting the stocks, and we see a volatility in the IT stock pack. Given 10 days ago, the stock had fallen more than 5-odd%, hitting the 6-year low, the largest intraday fall in Nifty IT. But lastly, we look at the world valuations, they look pretty stretched. Though the IT has reduced and fallen almost 30% on over a year, but the valuations are still expensive for the IT pack. That 20-odd basis point given the overall pack from the previously trailing. If we look at the FY25 as a whole year, the IT did see a huge fall, but FY26 started on a good note for the IT given the good Q3, but this fall continues for the sector as well. And IT remains under pressure due to the AI disruption.
All right, thanks a lot, Jasmeet, for that. A lot of disruption coming in. Question marks also on the business model as well, and some places even buybacks are being questioned. Why not the money going in the R&D space? But Raghavendra, I want to take your views on it, and especially, is there a value emerging in the IT space, or you'd like to stay away from it right now until the clarity comes in the industry?
Good afternoon, Sharad. So from an AI winner, the IT space has moved towards an AI victim. Specifically the data services industry, which seems to be, in terms of revenue, threatened by the AI tools which have come up and the Anthropic development we had last fortnight. So we continue to believe that the concern is there for good, and we can stay away from the IT sector software companies at current juncture. There was some silver lining in the last 2 quarters where the US dollar significantly strengthened versus a weakening Indian rupee, but that margin expansion has also been factored in the numbers earnings reported this quarter. So with a stable dollar INR and the threat of AI and the Indian IT companies largely getting from an AI winner to an AI side of space, we would avoid large cap, mid cap IT stocks for at least 2 quarters unless some clarity emerges. And as Sharad, you rightly pointed, the R&D spend has been not very impressive. So unless some companies significantly invest in cloud computing AI, we would avoid.
Right. So, of course, AI concerns are definitely there. Let's wait and watch how things pan out. But there's a lot of action in the mid-cap space, and the stocks such as AstraZeneca Pharma and even Karenix Microsystem are in focus. To decode all these details, we are joined in by Varsha. Hi, Varsha. What are the key details for these stocks?
Well, starting with AstraZeneca, you're seeing the overall Q3 numbers are weak, although there was a revenue growth which was led by oncology and rare disease segment, which AstraZeneca is into. But if you see the margin, there's a sharp decline in margin, and this was due to higher purchase of stock in trade. But if you see, there was a little impact on profit because of the lower base in last year, that is Q3 FY25, and because of that, you're seeing some bit of growth in profit. So overall, yes, a weak set of numbers, but second on the list is of course Karenix. If you see, the stock is down because of the weak set of numbers in Q3, but Karenix was actually in focus in morning because of the order of Kavach. So they've received order almost 411 crore order from Banaras Locomotive Works. This is for the Kavach system. So overall, these are 2 stocks which are in focus as of today.
All right, thank you very much, Varsha, for that. Varsha has a very strong presence in the small cap, mid cap space when it comes to the studies of that. But over to you, Puneet.
Well, thanks for that, Sharad. But Raghavendra, completely out of time actually, and because of paucity, but would love to get your views on this. But probably connect with you at another time. That's all the time we have on this edition of Trending Stocks. Stay tuned. A lot more action on the other side right here on NDTV Profit.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends.
It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar.
Lackluster day of trade on the Lal Street with Nifty hovering close to 25,800. Sensex sheds over 400 points. IT, oil and gas and realty. Top sectoral laggards, metals and auto remain resilient. HUL under pressure despite an inline set of numbers. Profit declines more than 30%. Management upbeat on growth in home care and coffee segment. Lenskart meanwhile logs a spectacular Q3 with the net profit jumping multifold to 131 crore rupees. LG Electronics on the back foot after reporting a slow quarter. Sources tell NDTV Profit that the Indian auto component industry is in a wait-and-watch mode as India and US move closer to finalize the bilateral trade agreement. New projects on hold with more clarity awaited. And the government is set to release the retail inflation data for January based on the new CPI series today. The new series with base year 2024 will cover 358 items as compared to 299 products and services factored in the 2012 CPI series. The country is expected to witness widespread disruptions as several central trade unions backed by farmer groups have called for a nationwide Bharat Bandh. The Bandh is in protest of the introduction of 4 new labour codes by the government. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But first things first, let's take a very quick look at the markets. And in fact, when you talk about markets, it's actually a lackluster, sort of tepid day in trade that you're seeing. As far as the Nifty is concerned, a 100-point cut thereabout is something that you're looking at right now. When you talk about Sensex as well, that shade of red is actually much darker when it comes to Sensex, down about 400 odd points. Let's also talk about the sectoral picture at hand. It's actually IT that is reeling under pressure on the back of AI disruption fears. And other than that, actually a bunch of headwinds that you're looking at when it comes to the entire IT pack. Other than the AI fears as well, almost a 5% downtake is what you're seeing coming in as far as IT is concerned. 1% downtake for realty, oil and gas and media also on the back foot. So those are some of your top sectoral losers as well. When you talk about the sectors that are holding up quite well, resilient right now, you do have metal, rural, auto and Nifty Bank holding on to just a tad bit of green right now. But let's also talk about some of the gainers and losers right now. When you talk about the Nifty 50 pack, there's actually TCS, Wipro, Infosys, Tech Mahindra, HCL Tech. Those are your top losers from within the Nifty 50 pack as well, down anywhere between 3.5% to about 5% right now. Like I said, there's actually M&M also that is down and out in trade, 1.5% downtick coming in on that counter. HUL as well, after a largely inline set of numbers, 1.5% downtick coming in on that counter as well. So that's largely the kind of stock-specific picture as well that you're seeing. But tell you what, let's also move on and get you the word coming in as far as commodities are concerned. It's actually gold that is losing some shine as we speak, and also silver that's on the back foot, down about 1.5%. Viren Vakil, commodity consultant at Paradigm Commodity Advisors, joins us on the show right now. Mr. Vakil, thank you so much for taking time out and joining us this afternoon. You know, it is a very interesting day. In terms of that pullback that we're seeing, does raise some fears when it comes to the kind of moves that we've seen off late coming in for silver. Do you think that little bit of bear market is back in play? Do you think that the volatility is right back in the spotlight when it comes to silver?
I'm not still expecting bear market, but it looks like a broader unwinding of risk-on trades under the leadership of Bitcoin. As Bitcoin has lost nearly 30%, 30-40% from its last October peak, I think all risk assets like gold or emerging equities, especially Asian emerging equities, are in corrective mode. What I sense is re-rating of risk-on assets, and some of froth build-up in this asset is, I think, it is now reducing.
All right, then, so that's the take coming in as far as silver is also concerned. Any levels that are standing out to you? And we'll come to gold in a bit because, you know, you're seeing a little bit of a pullback there as well. But when you talk about silver, which are the levels that you think are going to be key support levels, resistance levels, key levels to watch out for?
Chinese silver market is still a bit, and forward curve there is inverted. In COMEX term, or London spot term, near term support would be around 78 and thereafter 74. On upside, near term resistance is 90 and thereafter 95. Currently, I'm sensing market may consolidate between 75 and 92. Once 92 is breached and market hold above that level, we may see resumption of original uptrend.
No, absolutely, and let's see how that really pans out for silver as well. But I quickly wanted to try and understand if this is a knee-jerk reaction that you're seeing coming in as far as gold is concerned, or do you think the near-term picture is also looking a little bit tepid? You did have the strong jobs data that seems to have sent a little bit of, a fear in terms of gold investors. With those lower interest rates also back in focus, that urgency has sort of weaned off when it comes to Fed cutting interest rates. Do you think it's a knee-jerk reaction though?
We may see some reaction, but what I'm sensing is the broad trigger, that is currency debasement trade or de-risking from fiat assets, is still very much intact. Moreover, gold ownership is largely institutional one, like central banks, large hedge funds, or institutional deep money, what I would say. So I don't see major or long-term bear market in gold. There are still bargain hunters are active, and dips are prefer to be bought rather than spike to be sold.
No, absolutely. And, I wanted to get a sense of a couple of triggers that were actually tailwinds when it comes to gold prices. Right now, they seem to have not been that much of a trigger coming in, but there's de-dollarization and there's debasement. Do you think those two factors, how is the market currently perceiving them when it comes to bullion?
Current ownership, especially volume in gold, and open interest built up in Shanghai Gold Exchange is probably largest in terms of recent years. So I'm sensing volume participation, especially retail ETF investors as well across the globe, means Europe, America, China, and even in India. This participation is maybe hedge against inflation or hedge against chaos, or maybe market is sensing coming one or two rate cut in Fed, and mostly the end of QE policy as signaled by respected Fed chair. So I'm sensing first quarter or maybe March, April, we may see resumption of uptrend based on liquidity easing.
Rather than near term, do you see that $5,000 an ounce level also being maintained? It's very hard right now, Mr. Vakil, to be able to predict accurately what's going to be happening when it comes to gold prices. But if you were to give a little bit of forecast here, either in terms of levels or in terms of price direction for the next 3 to 6 months, what do you have in mind when it comes to gold?
Tail-end risk is clearly skewed to the upside, and path of least resistance is also upside. My levels, broadly speaking, for 2-3 months is 4800 and upside 5450, 5500 still very much intact.
Aradhan, and a very quick word coming in as far as Bitcoin is also concerned. Of course, we'll get back to, the metal space as well. But, Bitcoin has been in the spotlight for quite some time. You're seeing heightened volatility there as well. But what are you expecting? Last time, when you were on the channel, you had told us not to be catching a falling knife when it comes to some of the precious metals. Is that the sense that you have for Bitcoin as well?
For Bitcoin, I am reluctant to be on long side. I'm still seeing creative destruction, what I would lightly term. Still, I'm sensing downside there.
All right, then. So sensing some downside when it comes to Bitcoin then. But, what's your take coming in terms of gold and silver ratio? Where are you seeing it headed? Because it has been in the spotlight. You've seen those big moves coming in terms of the gold-silver ratio as well, keeping in line with the sentiment when it comes to precious metals. But what kind of ratio are you then expecting, and what do you think it's going to be indicating, at least in the near term?
Silver is high beta item, and currently ratio, technically speaking, ratio may move in favor of silver. In numbers term, it may retest 48, 50 or even 45. As long as it stay below 66 or 67, this ratio may act in favor of silver. That is, silver may outperform gold.
No, absolutely. And, Mr. Vakil, out of the three, spaces that we've talked about, gold, silver, and Bitcoin, which are the ones that you're going to be picking on for the next 3 months? If somebody was to place a bet between the three, which one would you advise them for?
I would go for gold since my company central banks are much more stable. So gold, I always trust gold.
All right, then. So there you go. Gold is the new gold. That seems to be the outlook here as well, at least for the next 3 months. Thank you so much, Mr. Vakil, for taking time out and joining us on the show. So there you go. That's the entire outlook, not just when it comes to gold, silver, but also Bitcoin. But tell you what, let's also get a move on and take a very quick break on this note. More news and updates on the other side.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This
Welcome back. Thank you so much for staying tuned in. Well, it's time now to talk about a sector that is very much in the spotlight right now, and I'm talking about IT. Look at the cuts coming in on some of these IT stocks. TCS is down about 5.5%, Infosys down about 5%, Wipro under pressure, trading with a cut of 4.5% as well, and even Tech Mahindra with that loss of about 4.5% in terms of the kind of move that you're seeing for some of those counters. Let's talk about the top 5 reasons why you do have IT that is under pressure right now. So number 1, of course, is AI disruption. You do have some of those fears that have come back in the spotlight after that HUL AI rolling out as well, and you do have a lot of news flow coming in. When it comes to your legacy players, that's a little bit of a concern coming in for them, because legacy tech giants could be losing the plot just a tad bit right now. So seems to be the concern. But let's also talk about some of the other fears right now, because the market is expecting pricing pressure as well when you talk about those AI cut in terms of those delivery costs. So that's where the spotlight is at in terms of the delivery cost, and that's also something that is slightly weighing on some of those counters down anywhere between 3.5% to about 5%. Also, some of your top losers from within the Nifty 50 pack. There's also something else that you're looking at in terms of the new AI automation tool that is also threatening some of your advisory and SaaS related workflows as well. Could actually be replacing teams, and that's the kind of commentary that we've also been getting from some of these AI disruptor companies as well. In terms of the other action, you do have human-led Indian IT that has made a little bit of a risk, a revenue risk, if you will, when it comes to automation. Other than that, when you talk about just the valuation picture and look away from the entire AI fear picture as well, you're looking at stretched valuations, you're looking at that return delivery also staying muted, and that also seems to be a little bit of a concern. But with that in mind, let's quickly take a look at what else is not doing well right now. So there's M&M that is back down with that 1.8% downtick as well. Let's talk about the numbers. You're talking about a record-setting quarter, though. You're talking about strong growth across autos and tractors. In fact, you do have Neeraj Chau's caught up with Anish Shah as well, Group CEO and MD of M&M, and began by asking how the company keeps outperforming despite rising expectations. They've also discussed the entire outlook when it comes to IT and also AI when it comes to M&M. Let's go across and listen into a slice of that conversation.
Record-setting numbers by Mahindra & Mahindra. The only problem is that the street anticipates them to do well every quarter, and therefore the expectations are set so high that it must be becoming difficult for Dr. Anish Shah and team to beat them. Dr. Shah, is there a good problem to have or a bad problem to have?
Well, at 66% operating profit growth and 47% reported profit growth, in some ways I can say it's a good thing that people continue to expect us to do well. And it's probably a better thing that we stay slightly ahead of their expectations as well.
Yeah, but you're creating benchmarks, right? I mean, every number is a milestone, I'm sure, but a 50,000 crore number or whatever there's X numbers that you're setting up. How do you see the trajectory ahead as the base goes up, but presumably the opportunity size goes up with all the FTAs that India is signing, maybe export opportunities going up, but maybe the enhanced competition as well coming up, though I know you said that it's always competitive.
On that, Neeraj, as you're a market leader, you always have more opportunities. First of all, the profit pie grows as you become a bigger market leader. And what we are seeing is large businesses are capitalizing on that leadership. Our smaller businesses are starting to grow much faster and get towards that market leadership. So it's about pure execution. Our teams focus on what we call our input metrics. If we do our input metrics well, we will get the right output metrics, and collectively we will get the right results. So our focus is keep our head down, deliver what we have to deliver, the results will follow.
Okay, I'm going to use some numbers here to just get some answers from you. So one thing that people really want to know is the update on the booking number for 9S, 7XO, because I think some 95,000 bookings that you've received and multiple other facets as well. How do you think of the deliveries for all of these, and what happens with the increasing number of EVs in your portfolio, whether they result in some bit of margin dilution considering that input costs as well are moving higher?
So we are adding some capacity to EVs as well. The bookings continue to be very strong at dealerships on a daily basis. So that trajectory is a good one, and there is a wait right now because the demand again has exceeded our expectations. As we keep ratcheting our expectations up as well, we keep continue getting more demand. And on balance, I think we are in a good shape. We've also announced a new plant which will significantly increase capacity, but there are a number of actions between now and the new plant coming up for us to do that. and therefore we should be able to deliver what we need to for our customers.
It's a good headline number. 15,000 crores in Nagpur is the one that you're referring to right now,
That's
right?
correct.
Right. So give us some sense about it. I mean, what led to this kind of expansion? How do the timelines work with such an expansion?
So this expansion has been in the works literally for the last couple of years. And just as perspective, we've gone from maybe about 19,000 SUVs a month as capacity, roughly about 5 years ago, to maybe 65 to 70,000 as capacity right now. So we've increased capacity quite dramatically already. And that's what we often talked about, a 4x increase in capacity or close to a 4x increase. From now, we will continue increasing capacity further as well. But given the trajectory we've seen, given the demand we've seen for our products, and a range of products that are coming in that we've announced, the Vision S, the Vision T, the Vision X, which will create, I would say, a very, very strong set of offerings in the sub 4 meter range. We will need much more capacity for that. So therefore, the expansion in Nagpur is essentially planned for us to be able to get that capacity. If we have to continue meeting expectations, we need the capacity to do that.
Okay. Would it become difficult to beat expectations on operational metrics? I don't know if I missed that answer on the margin front in the previous one, but one, the rising share of EVs, two, the rising input costs, and if I talk to steel makers or aluminum companies or copper companies, all of them talk about the cycle likely to continue for the next 12 months to 24 months. Nobody knows, but that's the guess. So assuming that happens, right, how do you combat that?
So we have been able to absorb most of it in our operating leverage. And we've shown, despite all those increases, a 90 basis point increase in margin for auto and a 240 basis point increase in margin for our tractor business. We also have announced a 1% price increase because we haven't factored all of that in there as yet. So as we look at it point to point over the last 6 to 8 months, we have seen a greater increase in commodity price, but we feel that a 1% profit margin price increase is sufficient in that sense.
Another, there you go. So that's the word coming in terms of the price hike also offsetting some of those commodity prices and that volatility bit there. A couple of concerns when you talk about brokerages in terms of what they're highlighting. With the two brokerages that have cut targets when it comes to M&M, Morgan Stanley is highlighting that the FY27 could actually see a little bit of moderation when it comes to the tractor segment. So that's something that you're seeing there. And Kotak Securities is highlighting that the EBITDA in the third quarter seems to be below estimates. You do have the stock trading with a cut of about 1.7% as we speak as well. But let's stay with the auto space then and talk to you about the Indian auto component industry that is in a wait and watch mode at this point in time. India and the US are moving closer to finalize the bilateral trade agreement, and new projects with major American automakers right now are on hold until clarity emerges on duties as well as the fine print of the deal. In fact, you do have Danish joining in with all of those exclusive details in terms of what the industry is penciling in and what could really change once the agreement is sealed. Danish.
Both the US automakers as well as the